All right, welcome back everybody to the final weekend of the TraderLion 2024 conference. Super excited to finish it off strong this weekend with some fantastic speakers. We'll get into their topics in just a minute. But first things first, thank you so much for tuning in once again. This is going to be a great weekend, and hopefully the previous weekends you've got a ton of key takeaways, golden nuggets that you can apply directly to your trading. As always, if you do enjoy the conference, please go ahead and take the time to leave us a like down below. That helps YouTube know that this is valuable, and it will spread it to more traders and help them out as well. Before we get into it, just would be very curious to see if you can type in the chat right now, where are you tuning in from? We'd love to see all the different states and countries where you guys are located, because it's very cool that this is really an international event. So make sure to leave down below where you're watching us from. Diving into today's schedule, we're starting off strong with a market wizard. Linda Rashke has an extremely interesting as well as different perspective than many of the previous traders who have presented, and that should be a fantastic discussion. She's got a presentation to go through as well, sharing her thoughts and process. Then we've got Jon Brody discussing an extremely important topic that I think everybody can relate to and would be interested in: how to come back from a drawdown. He'll be sharing his personal experiences dealing with some pretty big drawdowns that he's faced during his over 30 years of trading, and how each time he's improved a little bit, learned how to deal with it, learned how to process that mentally, and also the steps he takes to dig himself out of a hole and move up the right hand side of his equity curve. Then at 12 p.m. we have our very own Nick Schmidt discussing less is more, simplifying your strategy, diving deep into his process and sharing multiple trade examples and how he applies weekly charts to decrease the number of decisions he has to make and identify those longer term character changes. So today should be absolutely fantastic. Let us know in the chat right now who you're most looking forward to hearing from. With that said, let's dive a little bit into these slides here. First things first, as always, we work really hard to bring the best speakers and make this the best learning experience that it can be. And, in thanks, we'd love it if you guys would help share the conference, spread this resource as much as you can on Twitter with your friends. Anybody who's interested, let them know. You can click the link right now that's popping up in the chat, and that will allow you to share it really easily on Twitter. And big thank you to you if you do go ahead and share. Also, this conference, of course, is powered by our sponsors, DeepView, StockTwits, as well as Interactive Brokers. Check them out. A great way to, pay it forward as well as support our channel is to check out these sponsors via the links that we're dropping right now in the chat. I always get this question. I'm sure I'll get it a few more times today. Will this be recorded? Yes. The recording will be available right at the same URL that you're currently watching this on. You can scroll back in time at any point, and we'll also be posting each individual presentation as a standalone video later on in the coming months. So stay tuned for that. So if you see anybody ask this question in the chat, please go ahead and let them know kindly that yes, this is being recorded. How to get the most out of the experience. As with the previous weekends, it's best when you guys are actively engaged, participating with the speaker in the chat, asking questions, all of that. Also, we highly recommend checking out and subscribing to the rest of the resources on the TraderLion channel. It's completely free. We've got interviews with top traders, free webinars, tutorial videos, so much out there that you can learn and basically help accelerate your own learning curve. So 100% free. As I mentioned, just click that subscribe button down below. Also, we highly recommend joining the VIP via the QR code right there. You can just scan that and join for free. And this gives you access to slides, as well as we'll be adding in notes for each presenter. And you'll also get access to specialized giveaways as well. Also, feel free to share notes, key takeaways on Twitter, tag myself, tag TraderLion. We'd love to see that. We'll help share it. And of course, you can go ahead and rewatch your favorite presentations at any time just by scrolling back on this stream. Also, not only does the VIP give you access to the conference resource from this year, but also a ton of other free resources, from model books to Price Cycle Mastery with Oliver Kell, the podcast resource that we're building, UTG. There's so much to check out here that, again, can help you speed up your learning curve and really build your foundation to accelerate those first few years of learning and hopefully help eliminate a lot of the mistakes that early traders make. So go ahead and check this out. Again, you can scan the QR code right there to sign up. Also, we're extremely excited to be doing a special webinar featuring Jason Shapiro, market wizard. You saw him present last weekend. Jason is a market wizard. He was featured in the most recent book by Jack Swagger, and he'll be sharing his contrarian approach as well as some really essential trading concepts in this webinar. You can click the link right now that's in the chat to check this out and register. Spots are limited to only 500 live spots. They're going pretty quickly, so you can go ahead and check that out right now to sign up. This will be excellent. Even if you don't trade his style, he'll be sharing key principles, especially regarding risk management that apply to any trading strategy. So you don't want to miss this. Go ahead and check that out. Also, another great way to pay it forward this conference and get on the good graces of the market gods, which we can all be on, make use of being on their good side, especially nowadays. You can go ahead and consider a donation to St. Jude's. So if you're enjoying this conference, you've gotten at least a few gold nuggets from it. Please go ahead and at least donate $1, $5, $10. That's fantastic. You can donate via the button down below, just under the chat here. Click donate. And let's go ahead and try to smash our goal for this year. And if you do donate, tag us on Twitter. I'll thank you personally, and I'll thank you in advance. Thank you guys so much to everybody who's donating. And it's just a pleasure to not only be doing this conference, but also be helping doing a fundraiser at the same time for a fantastic cause that everybody can get behind. Lastly, just another reminder to subscribe to the TraderLion channel. We've got tutorials, free webinars, key clips, the TraderLion podcast where we post, the strategies and interviews with, top contenders to the USIC and really how, they trade in their systems. You don't want to miss that. Go ahead and subscribe. It's 100% free. We're getting close to 100,000 subscribers, so help us get there by clicking subscribe down below if you're not already subscribed. And with that, enjoy today. Get your notebooks ready. These are going to be fantastic, and we'll get started with Linda in just a few minutes. So stay tuned, and we'll be right back. Make sure to leave a like down below if you're ready, and we'll get started in just a few minutes, as I mentioned. See you there. Bye. Okay, welcome back everybody to the next day of the TraderLion conference. Thanks so much for tuning in. To start things off today, we've got someone who is extremely special. I really enjoyed speaking with her last year, and I think this year is going to be even better. We have Linda Rashke, who of course many of you know from New Market Wizards by Jack Swagger. Linda is a market wizard. She was profiled back in that excellent book, which I highly recommend, back in 1992. And she's an extremely experienced short-term trader who first got started back in 1981. Linda, thank you so much for taking the time to be with us here today, and really looking forward to this.
Happy to be here.
Yeah, excellent. To start things off, I thought I'd kind of throw you a curveball a little bit, so we'll see where you take it.
Okay.
But to start with, I know one of your passions, along with music, is horse riding. So I wanted to ask you, what kind of parallels are there between the markets and choosing a great horse, or that entire kind of selection process?
Budget.
Yeah, budget. Yeah, I'm sure.
How big is your trading account? Seriously. You know, choosing a great horse, there's just so many different variables that go into that. It's like it's got to feel right. You've got to have a good chemistry with a horse. It kind of depends on the discipline that you're doing. A lot of times if you have a lesser budget, or a smaller account size, you get a younger horse that then you take a while to train. And same thing with a smaller account size. You
Right.
have to start off small and just, it takes a lot more years than you think. Same thing with riding. If you bought a young horse and you wanted to train him for dressage, I mean, think about being a 7-year-old gymnast, little girl gymnast. It takes a long time to build up the muscle and conditioning. So to compete at the higher levels of dressage, it would probably take like, minimum of 8 years training. And so you have to have a lot of, time horizon and enjoy the process. And so that's a perfect parallel for trading. Start off with a smaller account. Maybe it takes you 8 years to get up to a certain level, but you have to enjoy the process along the way.
Yeah, excellent. And I was re-listening in preparation for this to your feature with Jack, and you were talking about your early trading career and how very early on you had built up a partnership with somebody. There's a stock that was acquired, it gapped up, and you were down in the hole $80,000, which was more than your initial stake, and so you're actually in debt. But what kind of astounded me was in that interview, it seemed like you weren't really shaken up about it. You had kind of seen what could happen, and you had seen other traders that could do it. But what kind of bringing back to that moment? What were you kind of going through mentally? What were you experiencing, and how did that kind of process maybe shape how you thought about trading going forward?
Well, that was my very first backer, and I was on the trading floor with equity options, and
Hmm.
I was short straddles in a takeover stock, and so yeah, it was an $80,000 hit, which when you're 22 and you still have school debt was a lot, and I gave back the account, which was initially 25,000, and I had built it up to I don't know 45,000, but then when I took the hit, I think I ended up owing close to 65 to 80,000. I don't even remember,
Wow.
those days,
Yeah.
but it was a lot. And it's like a lot of things looking back does no good. You can't say shoulda, woulda, coulda, da 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 da. Especially in this business, and there's all kinds of crap that happens to us all our life. I mean, you might slip on something and fall and, break your leg, and you can't go shoulda, woulda, coulda. It's like, okay, how do I deal with this now? How do I, get better and recover now? And so in this particular case, it was a little bit awkward just because I had to find a way to get recapitalized, in order to start,
Right.
paying back the debt. And I did find somebody who needed a stooge, I'll just call it a stooge, to run around on the floor. And we were doing early market making before you had these electronic systems that would keep things right into line. And
Hmm.
so he paid me a salary of $3,000 a month. That doesn't sound like much, but this was like 1981. And then a little bit of a profit sharing. And we did not make a whole lot of profits just because his style at that time was being short gamma. And so everything looked cheap because the volatility hadn't exploded yet. But this is right at the start of the bull market.
Right.
So, it was kind of a miserable 2 years running around putting out fires. And then I just thought I needed a change of scenery and left California where I'd lived all my life. Parted ways with Morris. We were still friends, but he didn't need a backer in Philadelphia. And in fact, later on, when I wanted to become a CTA, he provided me with my very first trading account because you need to show a record on other people's money, not
Hmm.
your own money, but you have to show that you're responsible with other money. So he gave me his mom, an account under his mom's name. But so I went to Philadelphia, and man, it was a lot of knocking on doors. Really, I had to approach maybe 10 different people or entities or firms or before I finally found somebody that would be willing to back me. So that's just a perseverance thing, and I just figured it was a different floor, different faces, fresh start, fresh energy, and then you just go forward. And then I think it was about another 3 to 4 years I had paid off the debt, living very frugally. I
Yep.
didn't even have a car, and I shared an apartment with another gal, and I slept on a futon. So we are talking about very humble here. And that's what it does. You just, keep going and one foot in front of another. And it's, anytime you have an adverse experience in the markets, that's all you can do is to keep going one day at a time. Just take it one day at a time. And so I eventually built up an account for my own trading account.
Yeah, excellent. Yeah, no, showing a lot of resilience there, and that's great. Looking back on your career, I wanted to ask you, were there any other really important turning points? Maybe some a lot more positive than that first experience, but were there any moments where you made a really big shift in your trading style, or you developed, a setup that you use that really kind of changed things for you and changed how you approach the markets?
Well, when I first started trading, keep in mind I was doing options arbitrage,
Right.
okay, in the equity options, which is more of a neutral style of trading in terms of having a directional bias, but you still are doing the preparation and work and leaning a little bit one way or another. And I think I have a slide here. So this
Perfect.
was 1981, and I started off by using these SMR charts. Okay, so I get them by hand on a Saturday morning. I paid extra to have them FedEx to me, and this is exactly what they looked like. This is a 310 oscillator at the bottom, but at the time they had it normalized in a different manner, so I couldn't really, it took me about 10 years to figure out exactly what it was because the scale was different, but I eventually did. And so each night I would just, draw in the bar and call up this hotline number, plot the fast line and the slow line. And so this process of doing this by hand, um, helps you like feel in control and start to see patterns and stuff like that. But I want to show you this. You ask about what changed. So in a nice kind of rangy market for the first 5, 6 years, swinging, there was a bull market, but you can see here on this S&P chart, there were like, lots of overbought, oversold. Traditional indicators that I kept, such as the tick and the trend and the breadth, were
Hmm.
fairly useful in market timing. And then I remember I was actually sitting upstairs because I had had a horse riding accident, but I was still trading out of my house. Very expensive to set up your own quoton and lines and stuff. It probably cost me about $1,500 for a dedicated line and another $1,200 for the program. So people got it great nowadays, let me tell you. But if you look at this chart right here at the beginning of 1987, I mean, we just started this creeper, creeper, creeper mode to the upside. And I just had this moment where I just, like, I had no idea, what the market was doing, or no idea how to analyze it, or no tools or anything to put it in a proper context. And I just realized that I just knew nothing, So this was
Hmm.
after like 6 or 7 years of trading. And you know so that was a big aha moment.
For
You've
sure.
been trading all this while and you're like, oh shit, I have no idea what's going on, right? I think this was the type of stuff I used to plot at night as well, in addition to doing those charts. This was a 5 and 10 day moving average of the market breadth. You could do the McClellan oscillator. There's lots of variations on a theme, and you can see this is just recently when we got pretty overbought up at the top there.
Hmm.
And this was something here. I keep track of the 10-day moving average of the high and the low for the ticks. So when that starts to narrow, it's almost like a sign of complacency, like a low VIX. And so that also is a note of caution. And conversely, here you can see where you have a lot of volatility and the range in the ticks is very extreme, and that tends to be more indicative of a bottom. So I plotted all these things out by hand year after year after year, and really kept up all my numbers and my data and stuff by hand for at least at least 30 years, 32
Wow.
years. And then I started to get like basal thumb arthritis. I lost the cartilage in my thumb, probably too much on the mouse. So a friend made me an Excel sheet so that I could keep track of all that by a different manner. But I really got the most value out of doing everything by hand, even though I have it all computerized and stuff. It's just not the same as data point by data point by hand. So I know you had wanted to know my early influences, and
Hmm.
the first two backers, it really was not about the style or the technique. It was really the fact that they had this tremendous work ethic and this tremendous process. So my first backer, the one who I lost all his money, every night would do the same thing with the SMR charts, write down these numbers, and then we used to have to call in on a silent 700 Texas Instruments, to try and input all our positions to get the plots. It was really primitive back in those days. So watching his work ethic, and then the second backer when I was in Philadelphia, he was always there for at least an hour before the market opened. And mind you, this is floor trading, so you can't even, do anything but just upstairs, doing his preparation and review. And then after the markets closed, he would stay for another hour and a half, just scouring all the books on the floor. You could see where the options were and looking for like the little teenies, we used to call them then 16ths that nobody cared about. And, if he could go and find, spots to buy those the next day. And so it wasn't that he was expecting to make money off of buying these really cheap and expensive options. But what would happen is that if the stock came to life, they would allow him to then trade safely, against the trend. So say, for example, you had bought a lot of out of the money put options, for a 16th, which is how they traded back then. You're not expecting to make money off of those, but what they allow you to do is if there is a sell-off in the stock, then you can go in and purchase stock with the guise of protection. So just a lot of planning and strategizing, simple things like that. And just seeing this consistent routine day after day after day. And I mean, the traders around me that were successful, this is their life. They are, working all the time. So that was the early influence that really helped me. So.
Yeah, and that the work ethic, looking, planning everything out, that's the hallmark of any trading style, like you said. If you're a swing trader, long-term investor, short-term trader, that's going to benefit you, whatever your way of extracting alpha is from the markets. So that's excellent. And I want to ask you, in addition to that, this is a question that I've recently come up with that is one of my favorites, and I think it'd be great to get your perspective. How do you personally define risk, and what is your process for managing it?
Well,
It's a big
on
question,
the
I know.
trading floor,
Yeah.
I think all the floor traders and exchange members in general tend to have a larger standard deviation to their equity curve than, if you go upstairs and, are trading a little bit more money and stuff. We used to trade with a lot of leverage,
Hmm.
in the equity options. And so then when I started managing money, it was a different ball of wax. I managed my risk primarily by the equity curve. Okay, so if I started to see, the equity curve doing a bit of a drawdown or something that looked, funky, I'd get smaller.
Hmm.
And I was also very strict on position sizing and calculating out the average dollar true range for the futures.
Hmm.
And in fact, if I were to pop up a sheet here, could you see it over my PowerPoint presentation?
You might have to reshare, so you could stop share and then reshare as well, and then we can jump to that as well.
I don't know if this is going to, it won't hurt just to see. Can you see this?
Yep, perfect.
Ah, okay, so that's what I do each quarter. I calculate out a moving average of the daily range and
Hmm.
multiply that by the point size. So I can say that the S&Ps have an average daily range of $2,600, just rounded off, okay?
Right.
And but the bonds have an average daily range of $1,300. So therefore, in my unit size, I can trade twice as many bonds as I would an S&P. And then I usually denominate it per $100,000. So I'll have a unit size per $100,000, whatever that might be. Or perhaps if you have a $40,000 account, you adjust your unit size accordingly so that you don't end up trading the same size on crude oil that you perhaps would on the currencies or so forth. So I tried to keep it very quantitative oriented for the position sizing. And then I really didn't like to lose more than 2% on a position. Of course, that
It can
happened,
happen. Yeah.
especially if there were adverse events, but, the nice thing was about keeping a portfolio. I usually had 5 or 6 positions going on at once, is that something is always working somewhere. Okay. Something's always working. It's really rare that you have 6 positions on and something's not working. So it made it really easy just to dump the crap that wasn't working. You just hit like flatten, get it out of there, flatten, get it out of there, and then stay with the stuff that's working. And so, it was, I didn't, back in those days, I didn't use stops.
Hmm.
So the reason is because the size that I was trading was really too great, to put a resting stop in the market. Maybe not the case in the S&Ps, but most of the markets, and the bonds were pretty liquid, but a lot of these markets, you don't want resting stops, on really big size. But, I would always see if the position was starting to not work, and then you
Right.
just start peeling out of it, or just flatten if you can. So that's how I manage the risk.
No, that's exactly what I was looking for. And, looking at all the different markets here, were you always trying to trade different ones that weren't as correlated? So kind of like you said, one would always be working when maybe, others are pulling back, just to kind of give you that, a little bit more stability in your equity curve.
Yeah, it's not like you try to, and you do have to be aware of correlation. So for example, if I were trading the S&Ps and the NASDAQ, I would trade like a half a unit in each of them because it's basically the same,
Right.
similar position, not always these days, but same thing like with gold and silver. They're going to, be fairly correlated. So you just have to be aware of that. I might go, I haven't traded a trade in like the sugar for a year,
Hmm.
but I still do the analysis on it every night. I haven't traded a trade in the unleaded or the heating oil for like a good 8 months, but I still do the analysis on it every night. And sometimes you just sort of get in a groove with a couple markets and you just kind of keep on working them because you're in sync with them. So I mean, I would have to say that the metals for the last 2 years, have been predominantly my biggest trade. I haven't traded platinum or palladium, but I trade the copper and the gold and silver. And but then there's also a time just to walk away from them. Like right now, the grains are really coming to life, and I'll show you one pattern that
Hmm.
I detailed out for you. So I kind of left the grains alone for a really long time, but it keeps you fresh looking for different things. But I'll always trade the S&Ps. I almost always make a trade in the crude and the gold. And I used to always make a trade in the bonds, although I don't so much anymore. So,
Yeah, excellent. And a very common question we asked viewers for questions was, how would you describe your current trading style and how has it shifted from how you were trading a few decades earlier?
the truth of the matter is it hasn't changed at all, really. I still kind of do my S&P day trading. Some minor things have changed, such as the way that the market internals work. The ticks are of value on certain days, but they're
Hmm.
of no value on other days. So, and I'd say the last 6 or 7 years, I used to be a lot more engaged with confirmation, non-confirmation. I just threw all of that out the window lately, it's just doesn't mean anything. So uh that's changed. The other program I do a lot, it's in one day, out the next, or in
Hmm.
one day, hold, maybe 2, 3 days. I'll always do that. And a lot of times I put those positions on in the evening. So that's changed. The start of the session now is really Asia opening. And I like to initiate at the start of the session. Now, not always, because there could be some major economic data the next day, but, a setup's a setup, and the computer doesn't know the difference. The computer doesn't know if something, is going to come out in the morning or not. So I'm always trying to say, well, what would the computer do? What would the model be doing? Da, 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 da. So you have this like little broken loop in your head.
Hmm.
And because there's going to be news or something every single day, somewhere, somehow,
That's the world.
I am conscious of the crop reports because I've gotten nailed on those in the past. But uh, and then I have the third program, which actually has kind of become more on based off the weekly technicals, the daily weekly technicals. And the thing that you have to realize by having like 3 separate programs divided up into this is that, number one, the shorter the holding time, the greater the frequency of occurrence and the higher the win rate. So something like the S&P day trading, I'll have my highest win rate, and my holding time is going to be the lowest. And then on the flip side of the coin, if I'm looking at my daily, weekly stuff where I can put on a position trade and sit on it for maybe 1 month, 2 months, 3 months,
Hmm.
I tend to get 3 setups a year per market.
Hmm.
Okay, so if I have 3 setups per year per market, I might just capture one of those. Okay, so you have to like be realistic. If I have 100 setups and I'm capturing 65 of them, that's doing great. I've yet to beat the computer, but so and then the longer the holding time in general, the lower the win rate. Okay, because you might have a couple false starts, there might be other things, but that's why trend followers can win just 32% of the time, but they know how to hang on to those winners and really milk them. So they're just different styles.
Do you,
I
yeah,
um
go ahead.
I was I'm trying to get back to just doing all of it again. And I have to confess, I was trading pretty hard today and I was having adrenaline rushes. It's like my assistant is up in Port St. Lucie and he's busy doing other things, and I'm trying to, execute and put in stops. And I do much better. I really can't trade the way I used to unless I have somebody helping doing the order entry. So I got to figure that one out.
Yeah, it's a lot to keep track of for sure. Is there among those styles then, are you kind of more gravitating more towards the longer term now, or it really just kind of depends on the situation?
Uh, uh, No, I don't gravitate towards the long term. I love I'll show you some of the stuff that I look at. I
Sure.
love my in one day and out in 1 or 2 days. It's long term time horizons are really tough, because they play with our head. And I really don't feel confident in long term forecasting. I can just feel confident on a daily, weekly chart formation,
Hmm.
and it may or may not get legs. So, but sometimes if I have a long-term position on in something, it's hard for me to do my in one day, out the next day, that type of thing. And what I'm really trying to capture are the trend days or the range expansion or the days where I can trail a stop, and I'll show you what that looks like with this one pattern I got up for you. But yeah, I mean, nothing beats capturing a trend day. So
Yeah, perfect. Did you want to jump to that? I actually wanted to ask you first, do you still kind of typically trade those 6 positions, or has that changed as well? Kind of 2 to 6 positions.
uh Well, I had a bunch of surgeries the last 3 years, so I had a lot of disruptions and stuff. So I mean, I had a hip replacement, I had a major shoulder surgery, I tore my ligament, playing tennis, so I just had that, like a Tommy John type of surgery. So, you know, I haven't been playing full tilt boogie just because of
Hmm.
all these other things. And I also I took some time off and was playing tennis like 6 days a week, twice a day, I was that's all the injuries, and it's always trying to find a balance. I would love to do everything, but like right now I'm missing the game a lot. And so I'm pushing myself to see how much I can do again before, I start having heart attacks. How, I'm towing the line and trying to find out where is the line for me. So today I was pretty active, and I actually had to go out in the middle of the day and go running for 25 minutes because I just had too much cortisol. So
Well, it
yes.
sounds like outside of trading, you're enjoying things outside of the injuries, of course, but your tennis, that's excellent. That's, we don't live to trade. We, whatever the phrasing is, it's good to have passions outside of the markets for sure.
You know,
Keeps us balanced.
it's yeah, I mean, I thought I was retired, but then it's like, but I love this game so much. It's such a fun, enjoyable game, it's like, so it's like, oh, let me just get back in and, really have some fun playing the game. So that's where I'm at right now.
Perfect. Did you have more to run through here with these slides? I know you prepared some examples for us
I,
too.
I did, but
Yeah.
you were asking about my style, okay?
Yeah.
And I am very much just classic technician, swing highs, swing lows, chart formations, and the market structure with the swing highs and the swing lows. And so, for example, this swing up here, right? This leg was bigger than this down leg and bigger than this up leg, right? So this is a huge increase in momentum. Therefore, you have to be all over looking for that pullback. Okay. That's like a 90% trade. But with that said, you do have V tops and bottoms as well. So, it's all about putting it into a structure. And so that's one thing. I'm just very basic. One indicator, maybe the Keltner channels, to help keep track of some volatility. And you know, people would be shocked how basic I am. Just uh, very, very old school, classical, technical analysis. And that works for me. You'll never see me with Fibonacci or Ikimocho or, order flow or any of that kind of stuff. It's like I want the trade, boom, I'm all in. I want to get out of the trade, boom, I'm all out. I don't scale in, I don't scale out. It's like, okay, deal me another hand, like playing cards. Okay, let's get on to the next hand. Let's get on to the next hand. So I'll use that analogy.
And
So
I have a few questions. Sorry, if you go back to that
mm,
chart. So say you're stalking that pullback. What are you looking for then to actually enter that? Are you waiting for a reversal bar for it to move back higher? What's kind of your actual entry point? Say you're looking for that pullback and then looking to re-enter with that trend.
in a perfect world, you'll have a little loss of momentum, a little divergence down here. You'll
Yeah.
probably be able to see it on an hourly chart. So, there's two or three patterns that I like for reversals. You're either going to get 3 bars price overlap at the bottom of the swing or the top of the swing. So in terms of market profile terms, that would be described as the market coming into balance. Okay, so the
Right.
market coming into balance, and then that would set up a breakout play if you want to be aggressive that way. Obviously, a little divergence at the end of the swing is always sweet, but you don't always get that. And sometimes you not so much on a retracement trade, but but some other swings you will have a buying climax, a big range bar at the end of the swing. And if you take out the low of that bar, with one or two bars, you're probably going to get downside for another, 5 or 6 or 7 bars is sort of how the modeling goes. And I'm very big on levels. Um, I don't draw trend lines. I draw horizontal lines just
Yeah.
for the levels and then see, how we come back into those areas.
And those horizontal levels, that's like where a lot of key swing highs have kind of, you know, started reversals as well as swing lows. That's kind of what you're looking for to draw those horizontal levels.
Well, there's an old adage, you
Yep.
may not agree with it, but pros sell above previous swing highs and pros cover below previous swing lows. So I'm very much that way. If I exit and it's going to be a solid breakout, you can always re-enter again. It's never a problem re-entering again. So and it kind of depends on the volume and how the market's acting and the preceding structure, which I can show you. Um, I don't know, did I answer your question? Just the
Yeah, I think
level.
so.
Yeah,
Yeah.
you're looking for spots to exit. You're looking for have something fun. It'll just keep on spilling my guts here for everything. There was a sweet little one today here in what was it? The Russell. Okay, so this is my chart of the Russell here.
You might have to bring it back in. I just see it. Oh, there it is. Perfect.
Okay.
Yep.
So this is actually a 120 minute. I prefer to use like a 240 minute, but you can see this area here. So if you're a market profile person, you would call that a single prints. We jokingly call it the cave fill area. A profile person would call it, it has to repair. So here you can see it went up too far, too fast. Therefore, we have to come back down and fill this in. So you can very much treat these areas like gaps. Sometimes you just get a partial trade into the gap area. Other times you'll get a full repair, in which case you're likely to get continuation. If you never fill it or repair it, then it's very much a breakaway gap. You can see even here, this little area here, you came back down and
Right.
and filled. So anyway, that's just an example of the structure. I normally don't use candlestick charts,
Mm-hmm.
uh, but I do like on the 240 minute. I mean, just to find those little spots, and then during the day, I'm mostly watching my quote board, and just the little bars, but I don't have enough detail to look for a true reversal, this or that. I mean, I just see the tape action that it's stopped going down and it's, acting a little, bouncy support there. And then like copper today, then it started to, I'll show you that copper chart. In a perfect world, I would trade every single market if I could at the same time, but it doesn't really work that way.
We only have
Um,
two eyes.
yeah, 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 yeah. But
How much of your trading do you think is based on intuition these days? Because obviously you've looked at so many charts, you've traded so much. How much do you think
I
it's
I
feel?
don't believe in intuition. I
Yeah.
mean, I guess you could say that it's like the sum of all your experience or something, but intuition implies that you have a feeling that you can't necessarily quantify or identify.
Hmm.
And I just don't do that. I have to have a model, so you start to see things if it's going to start to work or not. And like this copper, I actually didn't trade this because I had too many other things going on, but you can just see it start to just creep. And right here, I'm like, God, I know I should buy that, but I didn't, that's
Hmm.
okay. So But this would be a case of where a market had sort of stopped going down and then it
Right.
did the little flush and it came back up. So I love that if you have a box and you flush down and you come back up. I think that's very constructive. So there's these little classic adages, the bull trap, the bear trap, the push back into the box, which is what we had with the S&Ps on Friday. Maybe it was a little artificial with that CrowdStrike thing. It doesn't really matter what the reason was, but we did push back down below a really critical support area. And then we sort of stopped right in the middle of that box, and now we'll see how that all plays out. Sometimes you can rotate around these areas for a little bit. So I'll, if you don't mind me just
This is great.
indulging,
Please.
indulging and doing all this stuff on the fly, because I might have posted something on Twitter about this at the time, but this is again, so my husband,
You might have
Damon,
to pull it back in. Sorry. You have to.
I'm
Okay.
just going to, okay, so my husband, Damon, let's get this out of the page, is very much a market profile person, and I am very much not a market profile person. But with that said, you know, you're always learning from different places and different sources and something. So I love these boxes. You had 2 data points for resistance and 2 data points for support. So really important structure if you have that box. And then if you were just to take the middle of this box, I mean, this is like I'm telling you, I'm in big school of the KISS method here,
Keep it simple. Yep.
very simple. Yeah. So you could see we just came right back down to the middle of that box, where in market profile, if you smushed all the profiles together, you'd call that a point of control, one
Right.
of a point of control, which provided support. So you have several scenarios. Here we just tested it and we bounced back up outside of that box. So that's constructive. Another thing that you can do is start to rotate around that area, because it's like a home sweet home to it. And in your most drastic cases, you will fall right through and go through the bottom of that box. And there was a technician from many, many years ago, Arthur Scleroux, who would say this. I don't know if it's really quite pertinent with this example, but the amount of extension outside that box could lead to the same extension outside the other end. So you have several different models, and you're kind of looking to see which it's going to do at that time. So that, excuse me, this is my water bottle, my water bottle during the day. You can never drink enough water.
Agreed.
And when we get dehydrated, we're not as sharp.
Right.
So just be careful about that. So I'll just go on and, okay, so if you had another question, let's see here. I was going to show you something for fun. Okay.
Yeah.
Because I'm always playing around with stuff. And this is something that I've been doing lately, having a lot of fun with these coils. Okay. So my goal was to come up with a more systematic approach for entry and trade management so that I can put the trade on and go out of the office and play tennis.
There you go.
And not have to watch the markets, right? Very dependent on our homework at night. So that's a big part of trading. I don't think people quite understand the importance of, doing a game plan at night and your preparation every night, night after night after night. But I love these coils where you get this back and forth, and I like seeing them on a line chart. And for example, if I took a program like TradeStation, you can take something like a parabolic or a volatility stop, and you can do a stop and reverse, and you'll see it go into a drawdown at that point. So that should also be a warning that you've got this coil building, because it'll always be a drawdown when you start to do that stop and reverse type of thing. And that's usually when it's ready for a bigger move. So the moves out of these coils, you can see I've just got a simple Wells-Wilder average true range volatility stop, real old school here. I can attach this with CQG. I can enter early and then trail a stop. I can set it so that it initiates at night when I'm sleeping and then it'll trail. So lots of ways you can go about that. So with this S&P, even though this is not a flat coil, it was still a coil of a wedge type, which usually is the end of a swing. So all of these are initial conditions that can lead to a bigger win. And I'll show you a failed one too, because that's always important when you do your work. You have to see what the ones look like that don't work. So this was a really nice bond swing. And here was the Australian dollar. And I loved this coil here. I thought it had chance to really get some legs and keep going just because this weekly had been so dull and the dailies had been so dull for so long. So I put this trade on and it got to, got something that was nice. And then of course it came all the way back down. By the way, this was a 3-bar up here. So it was a downside breakout from the 3-bar. That's a different pattern that I have. But you just never know if you're going to get a little or get a lot. This was the euro currency. I like doing this with 240-minute charts, by the way. You could do it with 120-minute. You could even do it with daily. But what happens is if you go out to daily, your frequency of occurrence drops way down. And so that's what you got to be mindful of when you do your research is what is that frequency of occurrence per market? So on a 240-minute chart, your frequency of occurrence of a really choice coil might be 1 every 2 months, So usually it takes about 5 to 8 bars of overlap on a daily chart minimum to build this kind of coil. So this was kind of interesting here because this Russell had a huge long coil, like everybody knows, that. And so I tried this this breakout here. You can see it got up here and then it got stopped out. So it was really like no harm, no foul. But that's what a false breakout would look like, or a losing trade, and that's why you trail stops. And then this one was really interesting because, if you had a resting buy stop in here, when the number came out, this is a little deceptive because it makes it look like it was a continuous move, but there was a gap there. And that 1 second after that, it moved like 30 handles and you had like one teeny little check back somewhere in here, just one teeny little check back. And then it was just off to the races. So your fill was not good, but I think it was Richard Dennis or somebody always said that the worse the fill, the better the trade, because the demand was so strong, the urgency there. So, I mean, this was a real outlier in how much money that took out there. And that's what you're playing. You're playing a numbers game. You have to have a certain number of setups. I know if I have 100 trades based off this pattern, 10 of them will probably be home runs like that. So
Sorry, I have a question actually about the last slide, if you don't mind going back. The second coil that led to the big breakout, it almost kind of makes a bigger coil with the first one. They're at similar levels. Is that something you look for at all? Kind of a fall back into that same range area and then look for the next breakout?
You know what? I really like to look for the 3 bars, and I'll show you exactly what that looks like here. I'm going to slide this over here.
Sure.
So, I mean, I was starting to think this market was just dead because that can happen to a market. It just goes dead for a period of time. But as long as you have these 3 bars, so a 3 bar is, so you see this bar here inside the previous 2 days high and low. That's a 3 bar. It didn't give enough range expansion to pull you in to the downside. But right here, you can see that this bar here was below the 2-day high and above that 2-day low. So pretty much, that serves as a good trigger. Even if you didn't have the coil here, that would still be a different type of breakout trade that I would take. Okay, so that's just a different pattern. But in this particular case, it all set up anyway. So that was pretty extreme. And And then I'll just show you two current trades that I'm in. I don't know if they'll get legs or not. This is the soybeans here. So you can see they had a nice little coil. Actually, usually on the grains, I'll use like a 120-minute chart because they just not the same hours. But so the beans are coming out the upside. And at this point, I actually initiated them on the opening last night. I went long and I mean, I didn't wait to get triggered in, and I actually sold. I shouldn't have done that, but I sold most of the position at the close just because I'm deviating from my methodology, you know. And then here's the corn, just trying to get some legs. It didn't quite. That's another reason I took off most of the position. I left one on, but I was like hoping that it would push up a little bit more, but they're coming to life, so that's pretty good. I'll show you what I do too. This is a nice little tool that people can use for themselves. I use Skype. I'm going to bring it over here for you so you can see. And I have like 3 different Skype IDs, and I can make notes to myself. So if I'm on my phone, I can type with, or I can send something that I want to research later to my Skype ID to myself. And so this is one of my chart libraries,
Oh, nice. Very cool.
Yeah, so you can, I kind of catalog everything on this, and you can see here, this was the work from the coils. I let my assistant on there. This is work from the coils. Another pattern. Let's see. This was another pattern, that I do. I try to look at the average holding time, the frequency of occurrence, and stuff. And this is really work on the trail stop methodology, where I can trail that volatility stop and reverse function, because I would say that maybe only 25% of initial conditions demand that you trail a stop, okay? Usually you're better just, exit end of day, exit on the next, morning on the previous day's high, or sell into a rally, or, that type of rhythm. It's rare that you get the runs where you can hold it for a period. So these are all, had to start a different library. So this is like what I'll do is I'll detail it out on a 240-minute chart. You can see this is just a simple ABC here, right? Pretty basic. And then the trail stop got tagged there, but then it re-entered. And then I'll go and show what the daily candlestick chart looked like. So we had some range expansion here and a close outside the Keltner channel. So that's another pattern that I'll do, looking for a reaction back down. It just, it's a little biclimax stuff. And then I have one thing, it's these little dots here are called PF3s, and it's for when the slope of the 2-period rate of change is going down, the slope of the 310 oscillator is going down, and they just highlight really nifty. And you can see this was poised to flip up again. So this was a pretty strong buy pattern. But that's what I'll do. I'll just try to keep on layering on examples for myself, and instead of trying to put everything into an Excel spreadsheet, it just doesn't ring a bell for me. I like to see the visual. And I had another chart library, but I made the mistake of of inviting a few too many people, and then all of a sudden I noticed that I was getting too many comments in there for it to be of much value. I'm like, I'm trying to put in and build this library of all these chart formations, and then all of a sudden everybody's piping in and they're all getting it wrong, and I'm no, I'm doing one just for myself. So that's how I keep myself amused during the day, because it's very difficult to keep your attention and your concentration up throughout the day. And I don't have a TV. I just do not believe in that. For me, that does not work for me. I don't look at blogs. if I post anything on Twitter, it's just because I'm really, really, really bored or something, but I have Twitter closed all day. And then I just have a few friends on Skype who have been on there for up to 25 years, and we post humor in the middle of the day. So it's for me, that's a big let's see here. That is a big tension release, you know.
Hmm.
So here's my humor I posted today. This was from my son-in-law who I had
Yep.
dinner with last
I
night.
saw
Okay.
this as well.
Yeah.
Yeah, this is good.
You know, and so, you know, it sometimes takes the stress off. Everybody's doing their own thing, you know. You know, nobody's making the same trades or anything like that, but it also is a forum to keep ourselves accountable. So we actually have a homework room. So these are ideas that anybody can do. Okay, so
Hmm.
just to show you, okay, this is another friend who's, where did it go, on the Skype room. And so he'll post all his homework, you know.
Hmm.
I didn't even look at it, but you do it, you know, because you know that, okay, he's doing it, so I have to do it, right? And it keeps you accountable, you know, having this routine and ritual. So, you know, homework only, no idle chatter. But of course, we
Idle
still
chatter.
get, oh, discrimination. Boys love Switzerland too. So we have one girlfriend in Switzerland, Ash is over in Puerto Rico, you know, Mandy's in Australia, and it provides some sort of community, but it's a community of your own choosing, you know.
Right.
Does that make sense?
Yeah.
So, and
No, that's
then,
excellent.
yeah. So
For
that goes with these keys to success. It's
Mhm.
like, uh, if you do get an idea from somebody else, that's okay. I just showed you, like, you can play around with these coils and the value of line charts because it helps eliminate some noise. But now you take at it and you have to see where it doesn't work, you know, what it looks like when it does. Is there, how does it work to trail a parabolic? How does it work to trail a moving average? You know, how do you attach that with your execution program and stuff? So you have to start playing with it and make it your own. And you have to do your own research. I've just never seen a professional trader who relies on somebody else's newsletter. Um, Keep an open mind because, you know, flexibility is the name of the game. I can't tell you how many times I think one thing and then it's like, oh, okay, well, the market's not going to get legs, you know. I didn't see that one coming today. I actually had bought some bonds last night, believe it or not, because it was like a nice little buy day. And I exited them just because they really weren't going anywhere. I had like 2 or 3 ticks in them. And then they just started falling out of bed. And I have no idea why. It was just so freak. Okay, this is what they were doing. And I just felt like really lucky, you know.
Hmm.
They were just doing this and then boom, you know. So who could have seen that coming? I mean, it all looks great after the fact in hindsight, and you look at the daily structure and there was a gap there on the yield chart and blah 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 blah, right? You know. But I just always, oh, look at, you know, we can draw trend lines here and see this flag formation. Oh,
Yeah.
that looks so great, you know, after the fact, right? But you know, I just always know that I don't know, okay? I don't know. So I'm pretty uh, quick to, you know, get real chicken.
And I had a question about the library, which I think is an excellent idea. Are you always kind of saving an intraday time frame and then also a daily time frame so you kind of get those two perspectives, or does it kind of depend on the setup, the trade idea?
Yeah, I always start the main work with the exception of those coils because I've been playing around with those, but I always start the main work off of the daily charts and the
Hmm.
daily candles because very integral to my way of thinking is that George Douglas Taylor's approach to the market. There's the buying day, then you exit, and then there's the sell short day. And of course, it's not a perfect count because you might be in a breakout where you're getting these extended runs to the upside, or you might start getting a lot of price bar overlap where nothing's going on. But I do like that rhythm a lot. And so the daily candles are one way of monitoring, for what's setting up. So that was the reason I looked at the bonds, is because they had been down 1, 2, and the 2-period rate of change right here was poised to flip up. Okay, so yeah, it's like about a 65% trade, and it actually was good for a little bit. You can see we did rally up in the overnight market, but that's where you have to be smart and say, okay, it's really rare that a market will rally for 4 sessions. And by that, I mean US morning, US afternoon, Asia, and Europe. Okay, so if we rallied in Asia and we rallied in Europe and we rallied in, the early US morning, it's very unlikely you're going to get anything more. So, yeah.
Yeah, excellent. And that 2-day rate of change indicator, could you kind of describe a little bit how you use that? Is that your stocks or a market's declining and you're trying to identify when that momentum reversal is going to happen?
It's like reading tea leaves. It's
Looking at charts is too much fun.
It's really reading tea leaves, but in terms of statistical testing, a 2-period rate of change has a better signal to noise ratio than a 1-period rate of change, and even a 3-period rate of change. So it does have a very small edge to it. And if you add a filter to that, then you can start to improve that edge. And then you also learn the times when not to use it. So for example, if you had a like an inside, narrow bar there,
Right.
it could be more of a continuation as opposed to a reversal, mess the count up. I love my favorite trading pattern, all through the 80s and the early 90s was we used to get these little buy divergences here in the S&Ps. I used to call it a 5-finger pattern because you'd have day 1, day 2, day 3 would be up, but you don't go home long on day 3. Okay. And then there would be day 4 and day 5, and you don't go home short on day 5. I had come up with this golf system, and it was just like, oh, I mean, an amazing, beautiful pattern. And here it was in the bonds. But you just don't really get them that much in the S&Ps anymore. So things do change. It started being, the pattern started unfolding over the course of 4 days, not 5 days, and, but it's a really reliable little pattern. So, and you can see even here, look at this lovely, lovely breakout we had, but it's 1, 2 days.
Yep.
It's there's a definite structure for where you get these runs like this. This case was a bear trap, right? It was a bear trap, and that is one of the patterns that can lead to what I call an extended run, although this was not an extended run. Usually the weekly will be a driver for those. So, just lots of little subtle nuances and stuff, but I would write down the reading of this every day, and then I would write down the pivot that would cause it to flip. And now I'll show you something here. I told you I can't really do this by hand like I used to, just because it's hard for me to write like I used to. But this is the spreadsheet that a friend made for me. So I like looking at these patterns here. This is the 2-period rate of change here. This is that 2PF3 down that I showed you earlier, where then I would look for a buy, This is the closes on one side of the 5 SMA, and this is like my little pinball thing. So, I have this for each of the markets here. and it's pulling the data off of C2G into an Excel sheet. And then I can compile them here into, just something that I can print off at night. And it'll look like this and, just help me with my homework. So I try to stay very ritual driven, with this process. And then, because otherwise, I get cognitive biases like everyone, I prefer trading certain markets from the long side only. I prefer trading a few markets from the short side only. I'd love it if some of them just went up and up and up forever, but this is my insurance against those cognitive biases, because I'll keep looking for the pattern,
Right.
and the initial setup, instead of sometimes when we're feeling most bullish, and it's never going to go down again. And you're wondering, how, I got to get some, how did I miss that move? Something like that, it's like, oh, and then you pull out the monthly charts and the all-time high, well, it can get up to 50 again and stuff. And, you have to have ways to guard against that. I'm no different than anybody else. I just know my weaknesses really well.
I love that. I love that. The
Yeah.
market doesn't know you're a market wizard. You gotta follow your process.
I'm Every day I'm a humble peon that sits down at
There you go.
my desk. And if I don't think that I'm humble, the market will humble me. So, yeah.
Yeah. And outside of the spreadsheets and adjusting that data and adding that data every day, could you walk us through your daily routine? Because you mentioned how important it is to set that game plan to prepare for, that the next opportunities.
Yeah, I mean, at the end of the day, I have two sheets that I print off. One's off of TradeStation and it details out everything. And then I have those other two sheets, but I have a sheet that I write down my homework on.
Hmm.
And see, I'm just very much into these trade sheets. So I used to do all this by hand too. So I'll take this sheet here.
Hmm.
It's refreshing the values right now with the yesterday's data. So that's why it looks a little funky. And then I'll write down my positions on here. I'll write down, if I don't write down exit, I'll forget to get out. Seriously. I mean, I have to tell myself what to do, put in a stop here, I'll write down if this is a 3 bar, I have a little notation, so, and then when I come in the next morning, sometimes it's completely changed, and I'll show you what I use here. This is kind of fun because I can slide these things over to
Yeah, it's
Zoom.
good.
Yeah,
I,
yeah, yeah. So
I
you
liked
see,
those two little notes too that you had on that sheet. Be a trade management pro, and then winners admit
winners
mistakes are.
readily admit errors. Well, I have to
Yep.
confess that has been on there for 40 years, so I make a lot of mistakes with execution. I just do. That's why I prefer not to do it myself, but it's like fix mistakes immediately. So like today, I don't know, I was trading the S&Ps and the Russell, but somehow I ended up initiating on the NASDAQ, and I didn't even realize it, until I looked up, and I'm like, I didn't buy that, And so I didn't even look if it was at a profit or loss. I just flattened
Sold.
it, that was not what I intended to do. So if I make this here, it'll be a little bit more interesting. Okay,
Hmm.
so I come in the morning, and these are 5-minute charts, and my day starts at 8 a.m. Eastern time. Okay, so I can see the overnight gaps. And for example, the copper gapped down, and then this is the previous day's low. The gold didn't really gap, but the silver gapped down and was holding previous day's low. So a lot of times I'll find that the market will start to move away from the gap, or towards the gap. It's just like classic gap style trading. Mondays are different. I have to say Mondays wig out a little bit because, Sunday night, there's a lot of action that happens Sunday night and you had the weekend buildup. But I very much key off the previous day's high and the previous day's low. So that's what all of these are. The Russell was interestingly an outside day. If you looked at it, took out Friday's low and then it once it started to come back up to that opening price, it's going to take out that previous day's high, just because of the structure on the daily charts. So I'll look at this for the first hour before, so it's actually an hour and a half until the NYSE opens. But there's like some fun little scalps that you can do and stuff. And, it's just a way of perhaps I had a very strong buy day reading for the day before, that night before, but I didn't put it on in the evening. And of course, invariably, the market will have rallied in Asia and rallied in Europe, and it'll gap higher. That was the case with the S&Ps today. We didn't have a huge gap up, but assuming something like this, then you'll have to buy a higher low. You'll have to wait for it to pull back. You can't chase, so it gives you a framework so you could actually short first, even though it's the first day up, but you can short first and then look for your buy day play. So this is pretty much straight out of that Taylor trading technique, I think people try to read that too literally, without really understanding that he's talking in concepts.
And in addition to the high and low, do you look at pivot points at all as key levels on an intraday basis? R1 or S1?
Pivot point for me is always a swing high or a swing low.
Okay.
Okay. So that's my definition of a pivot, a swing high and a swing low. And yeah, that's absolutely what I do. So for example, let me just see here. Get to a
And thanks for showing all these examples. These are excellent.
You betcha. The bonds was it the bonds? It was this gold. Okay, so I had this gorgeous I can show it with this. So this gold coming in had been down 1, 2, 3 days. So this was Friday's move in gold. Now, I'm cautious with gold because there's still an overwhelming amount of bullish sentiment there. The commitment of traders report is not something that I trade off like some people do, but I'm still aware of the fact that there are a lot of longs in this market. So after you've had this type of big trend day, then I have a trade that I call the Z day, which basically means you can short a rally or buy a dip. You can fade whatever it does first thing in the morning. So I actually missed, I saw this bear flag right here. It was on this nice, gorgeous little 120-minute chart, and I saw it and I didn't make the trade, I mean, a lot of times I see a lot of stuff and I just don't make the trade, but I didn't buy it either, but it was a bear flag. So I'll always like write down what that swing low is because once it started to move down, it's like, okay, there's pretty good odds it's going to make a little retest of that swing low. And then I did initiate to the long side here, and I sold it like about $1 higher above when it came out above that previous, let's see, high or low. So I have this on most of my charts. So this was what it looked like down there on a 15-minute. You can see this nice little loss of momentum into this little dip here. Crap, sorry about that. Where did it go? Thanks for your patience here.
No worries, no worries.
So yeah, so this is Taylor. You're buying below the previous day's low, and you're exiting it when it comes up above it. I didn't exit up here. I stuck an offer out just up here, and I got lucky and, flipped it out. And then of course you feel smug for about 10 minutes, and then of course it
Goes
continues on up
higher.
higher,
Yep.
right? So what? So it's all part of the game. You just have to have a good sense of humor about it. So that's the kind of stuff that I do, trading around those previous swing highs and swing lows, and just, the little bit of a rhythm. The fact was that, you had to do your homework. The night before, my homework said that this was going to be a Z day, some two-way trading there, and then it was just a matter of if you weren't engaged with something else. Because sometimes, I'll have like 12 setups on my sheet, but I might only do 3 of them because you get involved in, trading another market. So, and then sometimes I just I just have to hit flatten everything and take a deep breath and go outside, just because I'm very intense, with the
Hmm.
concentration, and it's I have to be careful that I don't get my cortisol levels so high. So, today I went out for like a run for 25 minutes. I stayed long the gold and the grains, but I found that anytime I hit flatten, I can breathe, I can see with some objectivity. Then I can put on the things again that I really like, but it's kind of a cheat way just to get rid of the losers too, get
Yep.
rid of everything, it all cancels out, but then let's put the winners back on again. Probably not the most, organized in trading there, but, I have to get into my groove again.
If it works for you, that's what's important. And it kind of goes to your last point here. Above all, take care of your physical and mental health. That's so key.
I can't emphasize that enough, get the good night's sleep, take your supplements, eat right, and you have to do physical exercise of some sort or another. You have to, just to release the stress. And I mean, that is one thing that I have always been, just tops at, trying to, stay in my best physical condition, and yeah, the mental stuff. I got a pretty thick skin by now. Everything
Yep.
rolls off, but I have my 3 or 4 days that I'll, have a little depression too. And you just have to talk to some friends and go out for dinner and make some jokes and, love your dogs and do that kind of stuff.
Yeah, perfect.
Feed
Did
carrots to the horses.
There you go. There you go. Linda, this has been really amazing. Did you have more that you wanted to cover here, or was this kind of your closing slide there? Oh, perfect.
Just on the trade management stuff, this is just me. I don't scale in and I don't scale out. But usually I will say that the trade management part of the equation is the most neglected. Everybody wants a setup. Give me the setup, for the coil and stuff. But it's the trade management that's going to make or break your bottom line, because if you get the trade management down, then it's scalable. If you don't have it down, it's not scalable. You're going to be inconsistent and so forth. But if you can get consistency in your approach to trade management, I mean, it might be entering and exiting after 2 bars, I don't care what it is. But once you're consistent, then you can make it scalable. And so, especially, the market has these incredible outliers. That's what makes it such a lucrative and fun game. But what'll happen is that if people make unforced errors or they're in some losers, invariably they're going to sell their best position. They're going to
Mm.
sell something that they have a profit in. And so, you just can't do that. You just cut the little crappy ones loose, and find a way to hang on to those outliers. And that's really a big name of the game, hanging on to the big winners, and they just don't come along that often, and you can't force them. And then the trade management, I already showed you, I like ATR functions for everything, but you could use a parabolic, you could use a moving average, just you have to have something. And like I already said most of this, the shorter the holding time, the higher the win rate. I mean, anybody can get a 90% win rate on the S&Ps if you're scalping for 3 ticks, you know? It's really not that difficult. Um, but you hold for a longer time and the win rate's going to go way down. So it's all a trade-off, and you have
Right.
to do what's going to work with your psyche. And so you can see other presenters and get ideas from them. But if you're newer on the learning curve, it's like you might try it for 3 months, and no, that's not really your style. And maybe you'll try options for 3 months. No, that's not really your style. It's like trying on hats, you know? And so that's one of the other things too that takes people so long in part of that learning curve, is trying on all these different hats and styles. And you can't try to do too much. I probably did a disservice, talking about the different things that I do, but it's like, um, it's like I've been studying orchestral scores for 40 years. So I know all the instruments and the moving parts and pieces. So, if you're just starting out, you're going to learn to play the violin or the piano or the guitar or one, musical instrument. And then maybe you add to that. And so it's the same thing with the trading, just don't overwhelm yourself, because then you start to frazzle yourself. And then once you've found your style, you must see, does it work in consolidation? Does it work in a trending market? Does it work in a bear market? All that kind of stuff. And then the frequency of occurrence. I can't tell you how many people I see posting stuff. And this is like from some of the technicians groups that, I've been in, and there's like sample size of 12, Well, even if you have a sample size of 18 or 20, say for example with seasonals, okay, let's say a seasonal has worked 90% of the time for the last 20 years. That means on a walk forward basis, it's only going to work 66% of the time, you see, because it doesn't have a high enough confidence factor, because there's not a big enough sample size. And so I see people extrapolating these things, and then they start to get into trouble, when it doesn't all work out that way. And okay, I just have one last slide for you. This is
No,
fun.
this is all gold. So please,
Okay,
please.
so this is fun
Yeah.
because this is a slide that I had from a different presentation. And everybody's like, what's your favorite setup? What's your,
Yeah.
like, is it a bull flag? Is it this? Is it that? And so this is just to put things in perspective, okay? Because I love cards. And a deck of cards is 52 cards. It's a closed system. Okay. That means that there's no other inputs or variables coming into that closed system. So we can, count the cards and, get an idea as to that kind of stuff. Okay. If you take bridge, which is another game I love, but I don't play right now. It's just too intense and time consuming. There's 635 billion bridge hands possible. Billion bridge hands. And if you have 4 players, there's 750 trillion possible hands. This is for a card game. This is for bridge, okay? So you can start to see all the variations out there. Nothing ever happens exactly the same way, but we would like to define it in a linear basis, so that you think it's going to, be these little equations and stuff that we play. I mean, that's just crazy to me. And that's why it'll take a minimum of 10 years minimum to become a bridge master, which I'm like the furthest away possible. But I've got a neighbor who is she's in her mid-70s. She's 4 houses down. She always wants me to play bridge with her, and she's got me on this bridge base. And I'm like, no, Marcia, I just can't take it today. I can't take it today. But she is up like at 7 in the morning playing with people around the world, okay, on this bridge base thing. And she goes to bridge games. And I mean, this is her life. And I watch her play bridge. I go over there and I watch her play bridge on this online stuff, and something comes up, boom, she makes a place. Something comes up, boom, she makes a place. I would have to sit there and think about it for like 10 minutes, And so that's sort of how the market is. The longer that you're in there and the more experience that you've got, like, I could just practically do some things, not many, but some things in my sleep. I just have, it's not intuition. It's all that
It's
continued play and
experience.
experience. Yeah. So, Wyckoff is also my hero for just basic technicals. And so I'll just leave with this, that the market never behaves exactly the same way as it did in the past. That's just pure Wyckoff. Each price move is unique. So the context is extra important, and it's human nature. We want our world to be orderly, to have equations that we solve. We don't like the fuzzy variables and the little gray area, but that's the importance of taking this Bayesian approach, see, which is just taking each data point one at a time. And as you get a new data point, you update your models. If you get a new data point, you update your models. And that's what you must do as a trader. And then you will maintain your maximum flexibility. So, and you won't be projecting, that something has to go here or has to go there. So, there you go.
Perfect. I think that's a fantastic place to leave it. Linda, you were able to share so much in just a short amount of time. Thank you very much for your time. I really enjoyed it. I'm gonna, really enjoy watching this back. To everybody watching, I hope you enjoyed as well. Please thank Linda in the chat right now if you did. Subscribe to the channel as well. Linda, thanks again for your time. If you had to leave everybody with just one last bit of wisdom, encouragement, what would be some kind of final words?
Oh man. It's awkward in the world nowadays with all this chaos that we see around us. It's exacerbated by digital mediums and social media and all that kind of stuff. And I just would say that the more positive of an outlook that you can find in life, it could just be one friendship or one good thing in your life, and things to be grateful for. Even though we have all this technology that's wreaking havoc, we do have advances in medicine and other things and so forth. And if you are in a state of depression or anxiety or where there's negative emotions, I think it will carry over into your trading. So, just you don't have to trade every day if for whatever reason you're just not feeling, good about the day or about life. Just don't force it. You can do some research and or maybe talk to a friend and stuff, but I think it's really important to stay optimistic, which is hard, but just find something to be positive and optimistic about. And for all of us, usually it's going to be our friends. So there you go.
I love that. That's a great way to end it, Linda. And yeah, there's not much that can not be improved by a walk outside with a friend or with a family member and, a good night's sleep, all of that. So, Linda, thank you again for your time. I really enjoyed this, and we'll be right back with the next presenter. Stay tuned. Thanks.
Thanks. Bye.
Okay, welcome back, everybody. It's my pleasure to introduce our next speaker today, Jon Brody. Jon is an extremely experienced short-term trader who has been focusing on risk and money management for over 30 years. He previously was at the Schoenfeld Group and currently trades for the Kirshner Group. And today we'll be talking and discussing an extremely important concept that I think everybody watching can relate to and has definitely gone through, and that is drawdowns. How to come out of them. He'll be sharing a lot of personal experience based on the the largest drawdowns that he's been through, and be sharing a lot of practical information about how to overcome them. Jon, really looking forward to this today. I think as we kind of messaged back and forth previously, this is such an important concept and topic that most people, everybody wants to focus on the setups and the trades at work and all that. But overcoming drawdowns is probably one of the most important things you can do and master as a trader. So thank you so much for your time.
Sure, Richard. Thank you for having me. Yes, that's very crucial in becoming a successful trader.
Yeah.
As you already said, I was been a trader short-term momentum for over 3 decades now. And over that time period, what I have noticed is that when things get tough, you have to be able to kind of right the ship. And I personally myself have had three drawdowns that have been significant. And they usually come after times of making a lot of money, being kind of on your highs, finding that you think you're invincible type of thing, and then you get hit with this kind of drawdown and kind of sends you on your way. But how do you get out of them? Like for me, that's the most important part, because if you trade for a long period of time, you're going to have one. It doesn't matter what your style is. You can be a momentum trader like myself, who's a short-term momentum trader. I usually hold stocks anywhere from a couple hours to a few days. I'm not an investor. I don't have portfolios that are 6 to 9 months long. But I am based basically on momentum. So what to do when things go south? Well, personally for me, the first time that I had an issue, I would say, was after the internet. It had the big internet explosion, and stocks were going all over the place, and there was money to be made. I mean, just you take a stock overnight, next day it would gap up $30, and literally you just had to press the keys, and it looked like you were just making money. Everybody was making money. It was very, in my opinion, simple time to trade because it was very forgiving.
Mm-hmm.
I was about 30 years old at the time, 31 years old at the time, and things were going well. And then I would say 2 or 3 years later, the market started changing a little bit. And again, at this time, I didn't have a big drawdown yet. This is my first of 3. I call them the big 3 because I had 3 big drawdowns. And what happened was I would still trade the certain way that I was trading before, and it wasn't really working. And so I had this big, I would say, meteoric rise in a short period of time. And then I got hit with about a 10 to 15% drawdown. Now, all my drawdowns, when I say big drawdowns, are about 10 to 15% of what I made prior. I've had 1 or 2% ones, little ones throughout the time, but they didn't really affect my yearly P&L. I've had 3 losing years that are basically out of the 31 years that I've been trading from these types of drawdowns. These, I call them almost cataclysmic, but they're not. Like when you're in them, it feels like the world is ending. But the truth is, right? But the truth is that everybody is going to have them if you trade long enough. Like I said, I'm a momentum trader. I know mean reversion traders that maybe would have 1 or 2 bad trades that would put them in a big loss, and then have to kind of find a way to, I wouldn't say dig out because I don't like using that term, but find a way to right the ship and become profitable again. So my first one was during the internet explosion, the 2004 to 2005. It was about a 14-month period where I struggled. And I didn't lose every month, but I lost over that time period. I lost about 10 to 12% of what I made the prior 3 or 4 years, that from 99 to 2003. The second one was a little after the financial crisis. So in 2007 to 2009 and 10, things were, again, I had a very explosive move in my P&L. Trading was very good for me. And then in about 2011, things started getting a little rough, but not so terrible, just a little bit, right? And then, chopped around for a while. I would say, had, medium years to about 2016, where the second one of these kind of happened. The volatility kind of got sucked out of the market for the first time. If you remember, the VIX was down to around 10 and around that period, 2016-17 area. And for a short-term momentum trader like myself, I wasn't used to that kind of shrinkage and volatility. And it caused me to have another 10 to 15% drawdown of the time period from 2007 to 2016 that I made money. I drew down about 10 to 12% off all that P&L that I made. The third one, which I'm just coming out of now, being perfectly blunt with my audience here and telling them that I'm actually just emerging from it. This started, again, I had a boom time from COVID to 2020 to about 2020, late 2022, early 2023. And then I drew down about 10 to 12% again from 2023 to roughly, it was about 9 months to, I would say, so actually it was, take it back, I'm sorry, it was actually September of 2022 to around September of 2023. Mm-hmm. And since then, I've worked my way out of it and basically am even now from the, actually that one was 13% that I drew down from there. So what do you do? Okay. Like I said, since it happens to everybody, how do you keep your bearings? Personally, for me, it becomes a mental exercise. Mm-hmm. What I mean by that is that, listen, when things are good, everybody's a superstar. And I don't mean that in a condescending way at all. I mean that everybody's feeling great. The P&Ls are going up. They're making money. They're buying fancy stuff, or maybe they're saving money, whatever they're doing. But trading is kind of an emotional business. So what's happening is that people are reaping the rewards of their hard work, but the guard's being let down a little bit because it becomes so easy. Maybe it's easier. They can't believe how much, the younger people who haven't had this seasoning and experience yet, they can't believe how easy it is. The older people who've been around the block a few times know that it's going to turn, but they kind of don't know when. And sometimes they also get a little bit, I would say,
over exuberant.
Unaware of the changes, right? There are small changes that happen in the marketplace that kind of your style has to adjust no matter how you trade. And if you don't adjust, your P&L will make you adjust. Yeah. So those are my three, I call them the big three cataclysmic drawdowns that I had. Again, they're roughly all the same percentage, between 10 and 13%. This one being 13, the one during the financial crisis. After that, 8-9 year period was about 11. And the first one was about 10 or 11 after the internet bubble. But if you've noticed, it was all, after times that were really good pockets of trading. Right. And I don't think that's coincidental. I think it's because, again, you're kind of a little looser, you're a little more aggressive. Maybe you get caught off sides. It's all kind of the same type of thing. But when it happens, it's shocking. I mean, there's no question about it. You start to wonder, can I get out? How am I going to be able to become profitable again? How am I going to be able to, maybe I'm not seeing it clearly anymore. How am I going to be able to begin to see it clearly again? And there are certain steps that actually work. And because call myself kind of the expert at this, of turning the ship around and becoming profitable again, I'm here to share some of my wisdom. And the good news is that when it does happen, and trust me, it will happen to you. I promise, if you've been here long enough, even the greatest traders in the world, guys that manage multi-billion-dollar portfolios, it happens to them. They draw down too. Just as a professional athlete, a baseball player bats 186 over 30 games. I mean, these are guys that are professionals. I mean, they're the best in the world at what they do, and they're still slump. And so it's kind of the same type of, I would call it the same type of um, skill set. You have to work yourself out of it. A little more mental, obviously. Taking, going into the batting cages and taking practice cuts is not going to help you trade out of your trading slump. But understanding why you're slumping and getting a different mindset and how to kind of turn the boat around, that will. So the first thing that needs to be done, in my opinion, like the first thing is to stop losing. Now, that sounds easier said than done, but the truth is that losing begets losing. It's very addicting. It becomes like almost like you expect to lose. Now, you don't go to trade to lose, obviously, but when you in a little type of or a bigger losing streak, you start to think about, well, how is it going to go wrong? What's going to happen now? Well, this never works. And that actually plays into how you trade. Right. Subconsciously, you don't realize it, but you trade differently. You become more skittish. You don't hold your positions as long. You don't maximize your profit. You chop yourself up. You trade in and out because you can't hold the position because you're too worried that you're going to lose. Or you hold on to losers because you don't want to book another loss. So you turn around and you hold on to that and it becomes a bigger loss. And what happens then? Well, that bigger loss that you're stuck in, now the opportunity cost is that you're missing all the other trades that you would have made money in that you're not looking at because you're too busy staring at the one you're losing. And when you chop yourself up, or you're too busy getting in and out of the same position, you're not letting yourself reap the reward of your confidence. And remember, you've been trading a while. You know you can make money at this job. You've proved it time and again. What the trade you're putting on is probably going to work if you give it time. But since you're kind of so worried that you're going to lose, you don't give it the time. And so you buy it at, these are all obviously arbitrary prices. You buy it at $100, it goes down to $98.50. You're like, oh no, I got to get out of this, even though your stop's maybe 96. Right. And then you turn around and you buy it back at 100 spot 95, and you're paying up 95 cents. Oh, see, I'm right. I got to get back in it. So it becomes kind of like a cycle. You basically get on a hamster wheel where you're chasing bad prices. And unfortunately, that happens to a lot of traders, especially short-term ones, and especially when they're losing. So the first thing you got to do is stop losing. And how do you stop losing? Richard, people will say to me, well, that's easier said than done. I'm losing money. You're telling me just to stop. Well, actually, it's not that hard. One winning day. I don't care if it's $500. I don't care if your average day. So for me, if my average day is anywhere from $30,000 to $50,000, and I'm losing, and I'm having a losing month, and I've had 6 or 7 losing months out of the last 10, and not big ones, just kind of like losing and just not being profitable or not moving the needle or just being breaking even, $1,000. I make $1,000 that day. That could be a start of me trading out of this bad kind of slump. Mm-hmm. The truth is, it makes a big difference mentally. Even if it's $500, just leave with a win. So if you're on a short-term losing streak of a few weeks, one winning day. If you're on a longer-term losing streak, let's say like what I've been, the 3 that I've been on, a winning week. And then, you know what? I just want to make money this month. I don't care if it's $9. I want to make money this month. I want to stop the bleeding. Okay? That's the only thing that matters. Stop the bleeding. Let's stop losing. I'm not worried about making that money back, because this is the part that people have a very hard time understanding. That money's gone. That's no longer your money. You're not in debt. So if you're down $500,000, it's not I'm down $500,000. It's that $500,000 is no longer yours. It's not part of your universe. Let's begin again to make $500,000. You have to train your brain to understand that. Let it go. It's gone. It's not yours. If you chase that money, I promise you'll lose more money. If you're worried about being down, oh, I'm down 460, or I'm down 500, or I'm down 520, whatever the number is, you make back 60,000, you're going to say to yourself, oh, I'm still down 460, instead of saying I'm up 60. And you know what? It's kind of just 2 ways of saying the same thing, but one of the ways is positive and one of the ways is negative. And the positive way really helps you in the mindset to be able to build again, because that's what you have to do. You basically have to build again. Yeah. And it's important Because once you do and start getting that confidence back, because again, with what I do, short-term trading, momentum, even mean reversion, if you do that way, but any short-term trading is very based on confidence. I don't have a fleet of analysts analyzing my positions. I don't have, I'm not holding stocks for 6 months, 9 months, a year, and having people on the board, or that's not what I do. I am a short-term trader. Okay, my job is to extract money from the market in a short amount of in a short time period. Okay, and be able to make that money to put it in my pocket. That's it. That's what I do. It's simple. It's not rocket science, but you got to have the proper mindset for it. And if you don't have the mindset, it's not going to matter what your technique is. Again, I don't care how fundamentally sound you are as a trader. If mentally you're not kind of in the mode, so to speak, or you're not going to be able to make money. You're not going to. You're going to sabotage yourself. So that's the first thing. We're going to stop the losing, right? And after we do that, and we're going to put a couple months together of wins, or a couple weeks, or whatever, start getting our confidence back. Also, what's important in this time period is that you cut your size. You trade smaller. Again, the process here isn't about the money. The process we're looking for is to stop losing, is to get back to break even and making money and slowly walking up those steps to profitability again, right? You took the elevator down. Now you got to walk the steps back up. There is no elevator that goes up. Doesn't happen. There isn't there. There's no quick answers. You're not going to hold a stock overnight and make $70 in it and be back. Okay. If it happens, it's a lotto pick. You're better off playing like I said, going to the casino and putting it on black, or playing the lottery, whatever. But if you want to be a profitable trader and turn the boat around, so to speak, it's a slow grind back. But here's the good news about that. If you set your mind for that, it will be quicker than you think, which sounds crazy to say because I just told you how slow of a grind it is. But if you put yourself in a position where you're just trying to kind of grind out money, you're going to have that day, whenever it might be. It could be soon, it could be a little later, but where you make 5x what you normally make. So if you're grinding out tens, all of a sudden you're going to make a 50. You're grinding out $1,000 or $500. All of a sudden you're going to make 2,500, and you're going to use that momentum and use that confidence to continue to help you trade kind of profitable again and put winning months, weeks, months, and years together. And that's really the first step.
I just want to jump in
Sure.
and because it is really amazing when, we for our style, which is more, market dependent, swing trading, position trading, you're in a correction where the overall market's pulling back, breakouts aren't really working, our style isn't really working. But as soon as the market pressure lifts and you make one or two good trades, all the kind of negativity and what you're feeling to their correction where, hey, this style is just not working, is it ever going to work again, it can just flip like a switch. And like you said, once you've got that confidence back, you see things better, you can execute better, all of that. 2022 for a lot of our style was just a long slow grind down where we didn't have any uptrends. But when that turned around and things started working, you remembered that you can do this, that you can find the right stocks, you can identify the leaders, and it was just kind of market dependent. But as you said, it's all about that confidence and that mindset shift and thinking the right way. So yeah, I think that was an excellent point.
Yeah, and again, like I said, my losing streak, like I said, started kind of like that second half of 2022,
Right.
almost in the last quarter. It started getting very, in the first 6 months were fantastic. Things are going great. I mean, I want, I'm going to show a chart. Just give me a second here
Hmm.
of my P&L. So yeah, let me share this with you guys kind of here.
Yeah, and just for kind of perspective, your style, you thrive on volatility. So a very volatile market for you is opportunity. For our
Right.
style, for many people watching, it's almost the opposite, where we're looking for those trends. So periods where you might be trading well might not be the best periods for us, and vice versa. And it's like that for whatever style you're using. There's always going to be good periods and bad periods.
Absolutely. And listen, to the people watching, okay, I don't sugarcoat my trading. All right. For me, I'm not going to sit there and tell you that I'm the best trader on the planet. I'm not going to sit there and tell you how I make all the money. I have been doing this for 31 years, so I've done okay. But the truth is that I also have, I have leaks. I have mistakes that I still work on to this day. I'll be 54. All right. I started trading when I was basically 24, and it's still a learning process for me. So you never have it solved. So basically, this is a chart of if you guys can see it, I think you can.
Yeah, it's up.
Of when I started, when I came over from when I came to Kirshner in the summer of 2019, and if you can see how you started off, this is to scale. So I kind of the P&L is not important. What's important to me is kind of the direction of what was going on. So if you see for the first few years up until about, like I said, the second half of 2022, where I was, basically having little dips, making new highs, kind of like a nice looking stock, right? A nice stock. And then I kind of had this little drawdown here in this spot here. And as you can see right now, I'm back to basically my high watermark of where I was back in
22.
Mid 2022, just about there. It's taking me about, if you look, my kind of low was October, September, like I said, August, September of 2023. And since then, so about in 10 months, basic time, last month I basically was about flat. So 10 months time period, I was able to come back to basically my high water there. So basically, if you look, you had that time period where I was kind of riding the shit. I had the pullback, and then I was kind of flat. I was kind of almost sitting there. Now it was over a few months, but it was kind of like making a little, not really getting, stopping losing that first step. It kind of looked like a chart that's spacing out. If you have a stock and it's flagging out, it's spacing out like that, and then it starts moving up again. That's kind of like how I feel when you're kind of in a drawdown. You got to have to trade. You have to stop losing, find a way to, get that confidence back, and then, start trading, from a position of strength. And the confidence, since you're trading from a stronger position, it becomes easier to make money. It's very hard to make money when you're trading from basically behind the eight ball, from position of weakness. It really affects you. It really, it does a number on you. I mean, it's hard to, if you think about it, for all people who played sports, I played sports in my life. So for me, it's easier to use an analogy for sports. And I played some poker, so it's easy if you use poker as well. I like to use those analogies too. You go and you're playing poker tournaments and you find yourself that you're just constantly bubbling, or you're constantly just min cashing, or you're not making money at all. You can't seem to get the money. Or if you're playing sports and you play basketball and you're shooting 3 for 12 every time you go out there, and or your free throws, you're 4 for 11. You're just not making, you're not doing what that you've practiced and you are capable of, but you're just not doing it. It's just not happening. That's all the mental aspect of it. I mean, sure, sometimes, if you're a golfer or you're, like I said, baseball player, sometimes, maybe you're doing something wrong that's causing you to do this. Maybe, your swing is not the same. It's, dropping your shoulder or doing something, whatever. It doesn't matter. Yep. The point is that though mentally, when you're mentally strong and you have the confidence that you can go out there and you can hit that shot, or you can get on base, it does wonders. It literally, you become a better player. It's the same thing with trading. You become better. You thrive on it. You build on that. You hear a lot of these, trading psychologists. They talk about this stuff. The truth is, it's important. Mm-hmm. It's just, in my opinion, trading is 95% now. In my opinion, it's the mental aspect that's more important than your technique. Sorry, that's just how I feel. I've met people in my life, hundreds of traders, and lots of them have all different styles, and and they make money, and they do nothing that I do. They do the opposite that I do, or they do something completely different. I don't care. I don't care how you trade. Mentally, you have to have the same kind of mindset to be a winner, and that the truth goes really for any type of competition, in my opinion. So we covered basically how to stop the losing. We covered what to do. I kind of showed how I've traded out of it. Then the last part, the third phase of this, is like the begin a new phase. So now you get your confidence back. You stop losing. You put 6, 7 good months together in a row. And you're feeling, you're sizing up a little bit. You feel like you can, you obviously the losing time period still in your mind, so you're not reckless, but you realize that you're kind of out of the hole, and you see, you terra firma is right in front of you, and now you begin anew, and basically you take what you learned from that time period. And again, like I said, I've had 3, and each one's been a little different than the rest. This last one I think has been, for me, the easiest, even though it was a 10 months, but it was 10 months of me making the money back, so to speak. It took about 3 or 4 months, 2 or 3 months to right the ship, I would say. And again, that's my high watermark, not to become profitable. But the second one, the one that was kind of, so you had the financial crisis from 07 to 09, and then I was profitable to about mid 16, and then I had that trouble. It was basically May of 16 to October of 17. That to me was my hardest one, because that's when the market conditions totally changed, and I wasn't used to that change yet.
Right.
I never traded in a volatility index that was 9, really ever. So I had to kind of learn a new style, so to speak, a new skill. So that one was the roughest for me, because I literally had to fundamentally make a change. But this one, again, the volatility index is lower. VIX is 12, so we're still kind of low, volatility wise. But because I had the experience of the last one, what to do in these situations, be more stock centric. Don't trade market, trade, go where the action is in stocks. Stay, because I also trade futures. Maybe stay away from futures because they're very choppy and whippy. The money's in the names of the day, the money's in the names of the week. Your Nvidias, your Apples, your stocks that are breaking out the AI plays.
Right.
That's, I learned that from my second losing period. As long as you can take something from every hardship that you've had in this business, then I really believe that you'll be able to last. Because the truth is, it's a marathon, right? I mean, it doesn't matter if you have one, unless like I said, are playing the lotto, you have 1 or 2 good years. I mean, that's not going to cut it. You want to make a living at this job. You want to have a career at this job.
Longevity.
You got to be able to stay. You're right. You got to be able to stand the wins and the losses, and you're going to have the losses. And the most important part of trading is to be able to handle those losses. Because I've seen talented guys just leave the business because they just couldn't handle it. It just got to the point where they were like, I can't do it anymore. It's just too much for me. It's too much stress. And they quit. And they were talented. But they didn't have the fortitude to be able to trade, to be able to kind of start again. Right? I mean, I'll be honest. Listen, I'm a little extreme in that direction. So for me, I have a little more fortitude than most, I would say. So I'm a little more gritty. But the truth is that you need to have some, because, like I said, when it happens, and it is going to happen, you got to be prepared. And I'm hoping, having these conversations and having this interview, that these traders, when it does happen, that they're able to say, you know what? I remember Jon Brody. I remember his interview, what he said. I remember he was talking about, slowing down, cutting the size, righting the ship, just getting profitable 1 day at a time, then 1 week at a time, then 1 month at a time. And before I know it, I'll be okay. And that'd make me happy. You know what I'm saying? Basically, because in my mind, I'd be saving one trader's career instead of them throwing a towel and saying, I can't do this shit anymore. Excuse my language. I just can't do it. It's too much. They'll be armed with the knowledge that they're not the only ones who's been through this. Yeah. That most are through this. Most guys that have been around for decades have gone through tough pockets. Listen, I know guys that had $1 billion hedge funds that have lost 10, 15%, that have gone through hard times. They just turn around, they rebuild themselves. Listen, the financial markets, stories are littered. They're all over the place. Don't believe me, Google them. They're there. Yep. Even some of the most well-known hedge fund guys that people know, that they're household names, they've gone through the trouble. They've gone through that. It happens.
And jumping with the question, you've mentioned, stop the bleeding, cut the losses and then, cut your size as well. Is there anything when you're in a drawdown that you do kind of outside of trading to help rebuild that confidence, help rebuild your psychology as well? That's not completely trading related, but
Sure.
everything comes together. So everything's related.
Sure. So positive routines, right?
Hmm.
Journaling, trying to write down, because the truth is that when you're in a losing pocket, let's call it, okay,
Hmm.
things get blurry. They just do. I mean, you just don't remember all the bad mistakes you make. You don't remember the maybe over trading or the ill-advised D trade that you shouldn't have put on. You just don't remember them. Everything kind of blends in. It's kind of it's again the concept of tilt. I discussed this in, I believe, my last interview that we had. Tilting is kind of scary because you don't know, most people aren't aware when it happens. So when you tilt and you basically are in that fog, I call it, like the fog, you don't really remember what you're doing. You're kind of on autopilot.
Hmm.
But you kind of mushing buttons, and maybe for some people who trade super fast, they start just throwing multiple trades out there. For some people who are skittish, they don't trade at all. But whatever it is, it becomes extreme, right? So when you're tilted, you're not thinking of really the minute to minute, second to second decisions. Everything just blends together in one mishmash, and that's really the most dangerous time for a trader. So how do you make sure it doesn't happen to you? Well, again, when you're in the losing streak, you're kind of there already. So how to get out of it? Journaling is a very good thing.
Hmm.
I'm also a big proponent of walking away from the machine. I've said this before. There's no reason why you should sit there and stare at that thing for 6.5 hours, especially when things are not going well. It just becomes in my opinion, becomes reckless. Some people might say, well, you got to be there, you make sure what's going on just in case. Remember, though, if you're not in the proper mindset, you being there is not going to help you. It's going to hurt you. Because for someone who is focused and confident and is trading well, they're going to see things a little differently than someone who's muddled and tilted and in a losing streak. Even if they trade the same way, the confident guy is going to be like, you know what? That's not the trade. I'm going to wait till it sets up. The tilted muddled guy is going to be like, you know what? That looks good. I'm going to get in that thing and just get in it. Or, you know what? Even though it's a good trade, I don't trust that. I'm not going to do it. It's both ways, right? That person is not seeing things clearly. So there, like I said, what can you do? Journaling is one. I believe walking away from the machine, especially during the middle of the day, if you're a day trader or a short-term momentum trader, middle of the day is very trappy. Unless there's some kind of news catalyst, I think it's a good idea to kind of maybe you want to take 30 or 45-minute lunch break or walk around or stretch, do some exercise, whatever it might be. I think that's good. I think exercise is good. I think even if it's walking or whatnot, kind of get that, the juices flowing, make sure your mind works better when you're moving around. I think all those things, physical and mental stimulation to help you is that all helps. That's all, part of the routine, and having a routine.
Yeah.
Get up at 8:30, get up at 7:30, get up at 6:30, whatever time zone you're in. If you're a news-centric trader, read the news, find out what you're looking for, set your game plan up. You do the game plan the night before. If you take overnights, have a game plan for the next day. If you only day trade, have a game plan for that day. Have a routine. Set into that routine. That helps. That because the more regimented and the more discipline you have when things are going not good, not well, the better chance you have, and the quicker I believe you'll have of getting out of that situation, bad trading.
And is part of journaling kind of tracking that drawdown, or does that kind of almost emphasize it too much? And what I mean by that is, if you're kind of journaling very regularly and you're monitoring your equity curve, you can hopefully start to notice changes where, all right, I'm kind of entering a drawdown here before it gets too exasperated, before it gets down to that 15%, 20%, 30%. Is that part of journaling for you? And yeah, I guess kind of what are your thoughts on that aspect of things?
So there, I don't write my P&L down when I journal
Hmm.
because to me, I know people that do, but for me, it's not necessary. I'm not looking. If I want to see my P&L, I'll just pull up my account and look at it. And, when things are bad, start crying. You know what I'm saying? I mean, what I'm saying is that I don't need to be. That's not the really important part of journaling. I'm journaling to look at my trades later on when I'm out of the game, so to speak,
Yeah.
and having a bird's eye view and saying, why did I make that trade? Or why didn't I make that trade? Or was that what was I thinking? What wasn't I thinking?
Hmm.
Put myself in a situation when I'm removed from the actual action, so to speak, or the situation, and be able to make a more cognizant approach to the next time it happens. I'll look at my journal. Oh, I remember back on May 18th, I didn't make that trade. It sets up kind of the same. I didn't make the trade. I wasn't confident. But it was the right trade. So you know what? I'm going to make that trade. It's the right trade, and I'm going to journal that. It's just a thing. So I think that's the benefit of journaling.
Gotcha.
To be able to look back at your history, so to speak, and read about it and understand where things kind of, it's almost like hand histories. If you play poker, writing down hand history so you can go back to the hand history and take a look at it and see, oh, I took this line. Why? Was it the right line to take? Is that why I lost money that session? Or, just get unlucky? I mean, listen, look, this is extremely important for me to stress to the listeners. You're going to, like I said, you're going to lose. Okay. There are some people that lose less than others. But you're going to lose. It's good. You're going to get hit with the frying pan, and when it happens, you need to be armed with the tools to be able to right the ship. Because I know guys that didn't lose for 20 years and then lost, 25 years and then lost. I get you. This is not an exact science. It's close. Don't get me wrong. It's not gambling. You're a good trader. You earn year over year. You have a talent. You have a trade. You know what you're doing. Okay? That's not luck. But sometimes, we're people. We're not machines. And sometimes you may make a trade that might send you, off kilter. You may get unlucky. You may have a position overnight or during the day that gets halted and somehow you just some crazy news, black swan event comes out and you get stuck in it and it affects you. I mean, it can, it affects you for the next month or 2 or 3 months. The quicker you notice it, the shallower your pullback will be.
Right.
The quicker you take the reins, so to speak, and you are able to understand what's going on around you, the faster you'll be able to recognize, right the ship, and become profitable again. But don't bury your head in the sand. Don't make excuses. I try to help. I help a few younger traders. I try to at least. And when you're young, obviously, sometimes you think you know it all. Sometimes you are eager to listen. I think it's a combination of both, especially when things go well. But the one thing that I could tell my younger self, I remember people helping me, was that don't make excuses. Don't rationalize. Don't try to say, well, this happened to me. It was unlucky. I remember I used to say that. Oh, I was so unlucky. That overnight was terrible. I wasn't unlucky. One night's unlucky. 5 months is not unlucky.
Yeah.
Trading poorly. I'm not trading like an hour. Doing all the wrong things. Got to make a change. And the sooner you find that out, the sooner you realize that, better off you're going to be. And it's going to be shallow. Because the idea is to make your pullbacks shallow. Okay. 10 to 12% is not that shallow. It's, 2% shallow. You know what I'm saying? You make $1 million, you give back, 20 grand, 30 grand, who cares? Make $1 million, give back 300 grand, that's 30%. That's a problem. You know what I'm saying? That's too steep. You don't want that. My 3, I think, are somewhere in the middle. They're not shallow, but they're not trenches either. They're
Right. And when you're making the transition from the kind of all right, just one green day, one weekday, one green week, one green month to the begin a new phase, how slowly do you adjust your expectations and your position sizing and how much you're
So,
risking? Yeah,
okay, so that's a good question.
yeah.
I'm a little atypical. And what I mean by that is that the way I trade, and people who know me um, can probably attest to this. When it goes well for me, I can ring the register pretty fast. Like for me, it doesn't take long. Like
Hmm.
once I get a kind of once I
That shift
start
is
seeing,
quick.
right, once I start
Yep.
seeing it, I can make it quick,
Hmm.
really fast. Um, but because my style is basically pressing my when things are good, I put the pedal down, and when things aren't so good, I I try to kind of ease up on the pedal and make sure I don't, and again, the biggest times that I have that are most dangerous for me is when the pedal is down, I've made a lot of money. So if I make a lot of money and then the pedal's still down when things change and I don't catch it quick enough, that's the give back. That's that 10% that I'm giving back. You know what I'm saying? I kind of get stuck in that high gear. Um, so for me, it doesn't take long,
Hmm.
so to speak. But I think it wouldn't take long for others either that armed with this information because one green day turns into 6 green days, turns into 12 green days, turns into 2 to 4 green months. And I'm telling you right now, you look back and all of a sudden you see that you have 85% winning days. And you're like, whoa, like I wasn't even paying attention. And that I think that can happen for anybody. I
Yep.
mean, I think that's it doesn't take that long to right the ship. What it does take, I mean, to make the money back, I should say, but it does take a little longer to get in the mindset to make the money back. Am I explaining myself there kind of clearly? I'll try to put it another way. To actually turn the ship around, the battleship takes a little longer period of time. But once you turn the ship around to get to port, it does not take that long. I think that is
Yeah.
is kind of the crux of it. And
Yeah.
again, I think people who notice that and know that um, can not fear when it's going to happen. Now, I'm not saying they should sit at the edge of the desk. Oh shit! John says I'm going to have a losing year, or I'm going to have a losing month, or a losing. What am I going to do? I'm not saying that. Maybe you're special. I don't know. Well, I doubt it, but maybe you are. Maybe you never lose, but you probably will. And when you do, like I said, especially if you're a beginning trader, the experienced traders I think know this stuff already. You know what I'm saying?
Yep.
Unless they're an experienced trader who never lost before, in which case that might be a little harder because now they're like, what the hell? I never lose. What's going on? Um, but this is more for younger traders and traders kind of, maybe I would say uh, mid career traders, people trading between 5 and 15 years that
Yep.
maybe haven't had that losing cycle. Let's call it. I mean, it's like a bear market, right? I mean, it's
Yep.
like a bear market for the stock market. It's a bear market for your account. Bear markets end. And, you just got to make sure it doesn't turn into a crash. That's all right. I mean, you can have a little pullback. That's fine. I mean, it's going to happen. Make it shallow. Get a 2%, 3% correction. Don't make it into a 39% market crash where you're out of the business.
Yeah.
Because when things get rough, your job is to make sure that you're still around when things aren't rough anymore. And the only way to do that is keep the powder dry, right? And make sure that you're not, you're able to stop the losses, regroup, slow down, make the transition, and begin anew. And that works. I promise, I swear it works.
Yeah. For sure. Oh, please.
I'm saying I've been through 3
Yeah.
of them. I know it works, and
Yeah.
I've come out every time more profitable than the next. So to me, I mean, you're learning. It's a learning period. It's a period of awakening,
Hmm.
right? You're learning why that happened. What did I do? Did I just in time? Was I just plain stubborn? Was I chasing? So many different things, but with the journaling and with slowing it down and kind of seeing what's going on around you and writing the ship, you get all that information. So the next time it happens, and again, I think it'll be, usually shallower. It's not as pronounced. the first one's usually the worst. I'll be honest. And the first one's usually the one that hits you out of left field, especially if you're young and super successful. Like if you're killing it, you started trading, you're trading 5 or 10 years, you're making millions of dollars. You know what I'm saying? And then just, get hit with the anvil. That's the one that's the hardest, because then you start questioning, like, did I just get lucky? Is that all this was? I mean, you got to realize it's not luck. You're a profitable trader for a reason.
Yeah, and I actually wanted to bring us back to your first big drawdown and kind of what you think caused it. What were you kind of
Well, I
going
know,
through?
I
Yeah,
know
yeah,
what caused it. Okay.
yeah,
I mean, hubris is what caused my first drawdown. I
yeah,
mean, it was 1999. We had, the internet days where stocks were just, I mean, it was like Disney World. I mean, you took a stock overnight, it gapped up $20. Didn't matter what internet stock you took. These companies, they had no earnings. They were doing nothing. They're shells, but it didn't matter because they gap up $20 next day. You make money. And then even better was when they fell apart. And then as it went to 800 from 5,000, to me, that was even better, because I
yep,
mean, it was like just stocks were just melting off the page, and you just couldn't help pick up the money. It was just everywhere. And it's funny because when that was happening, you saw a lot of people who probably shouldn't have been trading. And I'm not saying because they're weren't talented, just because it was easier to make money. It just
hmm,
was. That changed. Volatility dried up. Uh, that fun time disappeared. Uh, I thought I was going to be buying a plane. I was 30 years old. I was ready to buy a plane, and that plane crashed. I mean, plain and simple. I hate to say it, but I got a rude awakening. I was realized that, guess what? Yes, I'm a talented trader, I believe, and I take my craft very seriously. But maybe I was also a little bit fortunate of the environment, and I got sloppy. I got, like I said, I didn't think I thought I was the next great Jesse Livermore, and I didn't have to do any, the proper work, and I got smacked. And that's exactly what happened the first time. Second time, I think, was more of a situation where market dynamic changed over time.
yeah,
I mean, it didn't happen like my losing streak in '04. That area kind of happened a year or two after that whole internet stuff. Um, After the financial crisis, when I made the money and I was still making money steadily, that was more of a grinder. Like I made a lot of money, let's say from '07 to 2010 and 11, and then slowly my earnings were declining, but I was still profitable.
yeah,
And then the market kind of had a change, a switch, and I just didn't. I wasn't able to. I didn't adjust my trading style in time, which caused me to obviously start losing, and then it's caused me to question even this. And again, it wasn't as steep as the first time. It wasn't as severe, but it started me questioning. Has this game passed me by? Because remember, I was already in the business now over 20 years. So
right,
now I'm thinking to myself, maybe what I do doesn't work anymore. Made some changes in my trading, realized how to trade in that type of environment. So when that type of environment happened again, which has been the last 6 to 9 months, to think about it, and I've been pretty profitable since then, I was armed with a new tool in my toolbox, and I was able to navigate this one, which has been the shallowest of the three. Even though percentage-wise it was around the same, time-wise it was, like I said, very shallow. It was really 6 months of so let's see, it was September, things started going well again. It was end of June, so to October. So it was about 6 months, 4 or 5 months of like just not being able to make money and losing actually. 2 months of probably losses that were most of it, then 2 or 3 months of losses that were kind of like bouncing around zero,
yeah,
but still losing. Like, if I might, again, these are hypothetical numbers. I'm just gonna throw them out there because they're round. If I was losing 100,000 during losing months, the 3 losing months and 4 losing months, I lost 100 grand. Then the next 2 or 3 months, I lost 10 grand. You know what I'm saying? Like it was, and then became profitable over the next months to kind of, so the actual losing session was only 6 or 7 months of not making money. But instead of like the first time it was like 14 months, I think, and the second time it was like 9, 10, of kind of bouncing around, not making money. And then this time, like I said, it's been the shallowest because I'm armed with knowing how to trade out of it.
and you can trade out of it.
Oh, for
You know the
sure. There's no
process.
question about
Yeah,
it. There's no question about it. I mean, when it's happening, you start questioning yourself. You start saying, what the hell? This is ridiculous already. But when I sit down and talk to myself about it, or I'm looking at my journal, or I'm really focused on what's going on the weekend, because I do try to replay all my trades and go through my day that day after I'm done, and then I think to myself, yeah, I'll trade this. I'll be fine. I just have to make sure that it's going to be probably 2 steps forward or 1 step back, and that's the best way. And then when I'm not looking, which is how it always happens, all of a sudden, like this time around, I have to draw down again from the end of June of 2022 to October of 2022, and then I made most of the money back to about mid 2023, and then I started going back down again. So I was kind of in that area, back and forth. And then from September of 2023, so it was that right. So it was about, let me see. So it was 4 or 5 months of losing. Then I made money back the next 5 months, and then the next 4 months was kind of chopping around again, but not really getting anywhere. And then from September of 2023 to now, I made money back. And the funny thing about it is the first few months were small, and then all of a sudden the last few months were big. And that's the way it works usually. I mean, usually it's kind of back ended where all of a sudden it's boom, 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 because you got the confidence. In the beginning, remember, you're just trying to put a winning. That's what you want. So once you get that winning month in, now it's a little different. Now you're able to kind of be a little more aggressive. You have a little more, the collar's not so tight. You know you can do the job, and you get a little more confident, and the numbers just naturally get bigger when you do that. Again, though, you need to be careful, because that's exactly when the guy is out there waiting to hit you on the head again.
Yep.
You start getting a little loose. Believe you me, it doesn't matter. It's right around the corner. It could happen. For me, that's my general weakness. I get fast. Everybody's a little different. Someone else's weakness could be that they hold on to positions and get stubborn. I'm not a stubborn trader. Never have been. To me, it costs way too much money holding onto something that's not good. I miss things that are good, and I'm stuck in this, load of crap that's not going to make me money. It's only going to cost me money and cost me missing trades. So that's not my thing. My weakness is I get speedy. I get, kind of stuck in, I would say, high gear, and slow myself down. And again, I have no problems being transparent with my trading. I'm this is my journey. Like I said, it's 30 plus years. I plan on being 30 more. I don't plan on ever retiring, ever, just so we understand each other, ever. I am a student of this. I plan on doing this until my fingers don't work anymore and I can't press the keys, and then I'll talk into a little box and tell what to do by then. Make no mistakes. This is a job that if you put the dedication in, it can be a very, very rewarding life. It's work. It's not, people think especially young people, that it's just an easy game, that you just do this, do that, and money comes in. It's not. It's a grind. It's tough. And you talk to anybody who's been in the business for 2 decades plus, and they're going to tell you that you better keep learning. You better keep understanding that put your ego at the door. Check it. Don't let it come in. Don't let it bleed in. Don't let it seep into your trading. Okay, because that's when the little losing guy is just waiting to hit you. He's there like a little gremlin, just waiting to get in there. And believe you me, when he gets you, you got a whole other. You got to deal with this. That's where I come in, help you.
Yep.
Get you out of it.
And you mentioned Jesse Livermore's name, a while back. And if there's anybody who's a great example for drawdowns and how the mental side of things can impact things, obviously his personal life.
Look at much talented. Look at much talent they had. Listen, history is littered with people that had immense talent, immense, like almost like. And again, I'm not one of these people. Okay, I'm not one of these guys that just have the. I think I'm a good trader, but I'm not one of these guys that's a savant, or like a maestro, so to speak, that or the Mozarts of the world that just are born and automatically unbelievable. I had to work at becoming successful at what I do. But history's littered people that have that talent, and just didn't have the mental aspect of it. So that was it. They never made it, or they were, flash in the pans or short lived. And it's a shame because I think that in today's day and age, there's so many more tools and ways that people can kind of learn and realize they're not alone in this. It gets to a point where people start saying, and again, suck, I can't do this. Everybody else is making money but me. The truth of the matter is, no, everybody else is not making money but you. Everybody goes through this. You know what I'm saying? Learn from the people that have been there. And when it happens to you, you'll know what to do. You'll know that it gets rough and it gets a little tough, but you'll survive and you'll be able to thrive and move forward and become even better than you were before it happened. The interviews that you do, it's great. They're fantastic because people get to see what minds are thinking. Other people, like, I treat nothing like Stan Weinstein. You know what I'm saying? Even though I grew up around the corner from him, but I treat nothing like him. I'm not that kind of guy. There are other, Ross. I went to high school with Ross. I treat nothing like him. I love Ross, but I don't treat it like. He has a completely different style than I do. But I believe that we all have the same type of mental approach, right, which can fit any style. So to me, that's the one thing you have to really master. Master that, then no matter how you trade, no matter what situation you're in, good or bad, you'll be able to navigate the waters and you'll be able to move forward and grow and become, if this is what you want out of your life. And you want to be a trader of any type. Again, short term, swing trader. Maybe you want to manage, multi-billion-dollar portfolios. Obviously, different skill set, different aspect, but mentally, it's not different. What are you gonna do if you run a hedge fund and you draw down 7%? I mean, 8%, 10%. I mean, you may lose some clients. I got a friend of mine who I know that. Successful guy, young kid, super successful, super smart. And when he was just started off, he had a humongous, with no fault of his own, basically like drawdown in his fund. It was enormous, and he was very young. And I'm like, and I had to talk to him, and I'm like, listen, it happens. Be happy it happened to you at this age, and not at my age. And he's even bigger and better than ever. This guy's a superstar. So you look at stuff like that, and you realize that mentally, it fits all. The mental part is definitely one size fits all, no question about it.
Yeah, and you mentioned the interviews I've done. Every single successful trader who is now making triple digits or whatever it is, having some success, they've all gone through drawdowns. That they've all experienced this. Yeah, and one of my kind of favorite takeaways from what you said here today was you kind of positioned it as every large drawdown that you've gone through, you've gained a tool, you've gained more awareness and improved.
Oh, for sure, absolutely. Because and the truth is this: the truth is that the most beneficial thing you learn, you could feel it start to come on, like it's coming, like what I'm saying, like you better slow down, listen, you've been here before. This is that little feeling, it's coming, slow down. For me, it's slow down. For other people, it might be something different. Slow down, put your foot in take it off the gas a little bit. You know what I'm saying? Your swings are getting a little bigger. Things aren't working as well. Slow down. And I implemented some rules myself to enable that. For example, one of my rules that I use, that if I lose, I lose X amount of money or I have 3 losing days in a row, I won't take overnights that night. I want to start new, start the next day new. Because I take overnights 99% of the night. I'm not just a day trader. I'll take stocks for a night, 2 nights, 3 nights, some option positions. I don't swing trade very often. Very rare. I hold anything 1, 3, or 4 days. Very rare. I do it, but not very often. But for me, that's one of my tools that I've learned, because what I've learned is that you start losing 1, 2, 3 days in a row, and you start taking overnights, and before you know it, for whatever reason they don't work. Now you look, you have 12 losing days in a row, which sounds crazy to say. I mean, I think once I had 10 losing days in a row. I was looking at it, I'm like, what the hell? It's not a green thing in sight here. Everything's red. And you're like, how the hell did that happen? What happened? Because you didn't start over fresh and new. And now I learned that for me, starting over fresh and new works. That's one of my tools that I picked up along the ways of this happening. Again, and I want to stress this, okay? This is my journey. I am also on the journey of all you people that are listening out there that either, like I said, are new or been around for decades, 40, 50 years more than me, maybe. It doesn't matter. That everybody has their own journey, so to speak, their own path. We can help each other. You know what I'm saying? The knowledge that people, listen to other people and these interviews, TraderLion especially, can help each other. We can help you learn something that someone else. That's why trading desks are so valuable, because you get to kind of have an idea what other people are thinking. It's, this is kind of like a huge trading desk, and people get to kind of pick the minds of people who they would normally wouldn't speak to. And I know a lot of people out there also are very into the technical part of trading. It's, talk about mental, but again, and I'll say it 1,000 times. Through my career, what I have noticed is when I am mentally sharp and I am mentally in the right frame of mind, I make very good money. I do very well, and I see things clearly. As a golfer, the hole gets bigger, the asphalt hoop gets bigger. And when I'm in a mental bad place, especially trading wise, and I feel like I can't win, and I feel like my confidence is low, I don't make money. It's that simple. I don't. So guess what? Let's try to keep those, to a minimum. And again, my trading style is a little different. I don't need to make money all the time, because my mantra, so to speak, is that my winning days are always towards my losing days, so to speak. If you look at my P&L for over a year, my top 10 winning days will always be 30 to 40% bigger than the top losing days. That's why when I go 50-50, I do fairly well. That's my style. That's how I trade. Other people percentages, right? For those people, this will stay important, because you have a 90% win percentage and you lose 6 days or 7 days in a month. Now you only win 58% of the time or 60% of the time, you're losing money. If you're 90% win percentage and you win 60% now, you're losing money, because your losers are the good winners. That's what the higher percentage win is. Usually it's you win a lot and you win little, but you win more often, and you lose a lot when you lose, but you don't lose very often.
Right.
Well, if that shrinks and you're only winning 60% of the time, you're losing money. Mentally, this will help you. Same thing.
Yeah. And I just have one or two more questions, John.
Sure.
This has been really great. Speaking from personal experience, and I'll kind of ask my question at the end here, but when I'm going through a drawdown or a pullback, kind of the first step, as you said, is cut your size, trade less, all that. But then, for me, when I've kind of realized that I've stopped the bleeding and I'm trying to, move out the right hand side of the base, kind of the steps I've found to be really helpful is first, take a step back, take a break, a short break here, kind of reset mentally, almost, sell everything, just go to cash and, focus on the mental side. And then I kind of work on looking back on my trades, building a model book to study, previous winners, all of that. So there's kind of two phases there. There's the kind of let everything go, and then there's the get back to work part of things.
Right.
So I wanted to kind of hear your thoughts on that, if you experiencing something similar to there, because some people feel like they can just kind of push through a drawdown completely and just grind through it, but that doesn't really let your confidence come back and let your psyche take a rest.
Well, yeah. Well, the old adage was, if you play basketball, you shoot yourself out of a slump, right?
Yeah.
Keep taking shots. That doesn't work here. That's just a way to bury yourself deeper. I agree with what you said, which is kind of like my 3 losing days in a row go flat.
Right.
So I think it's important to be able to let yourself miss stuff. And what I mean by that is that when you're not seeing things clearly, you're not trading well, and mentally you're in a losing streak, again, losing time period, you can't be afraid to miss a trade. You can't have FOMO. By you saying that you want to scrub the books, get flat, you know what I'm saying, go to cash, so on and so forth, you're going to miss stuff. That's okay.
Yeah.
Because you want to know something? Yeah, you may miss it. There are many times I miss enormous trades, but I wouldn't have made money on that enormous trade. So I'm really not missing it because mentally I'm not prepared to make that money. Now, gotta understand that people say to themselves, "Oh my God, I would have killed it. They made all the money. I would have made all the money." But the truth is, you wouldn't have made all the money. And I'm gonna tell you why. Because you're thinking as if you were trading well,
Right.
and you were in a winning streak, and you were winning, and you were
You're seeing the ball.
confident, right? And you were confident. Then sure, maybe you would have killed it. But you're not in that place. You're in the bad place. You're in the fog. You're in the place where you're not confident. You're worried. You're concerned. You're over trading. You're under trading. You're chopping yourself up. You're skittish, whatever it might be. So guess what? That opportunity is going to come along. You're going to blow it. You might actually lose on it. So better off not trading it. If that's going to help you, start fresh and new. Your job when in a losing streak, I stress again, is to stop losing. If that means slow down, cut size, be selective, and trade. Like I said, for me, it's slower, but for some people, maybe who don't trade a little bit, and be able to slow down and start new. You are going to miss trades. It's okay. This is your journey. It's okay. There'll be more trades. You'll find one, and when you're in the right mindset, you'll hit it out of the park, and you'll make much more than you would have made if you're trying to trade yourself out of the slump, because that does not work. You cannot trade yourself out of the slump. I'm sorry. No. You get extra aggressive when things are bad, you just lose more money. It's that simple. I mean, you just do. There's a fine line. Now, when things are well, you trade more, you usually make more money, but it's like the law of diminishing returns. You have 9 cheeseburgers, the 9th cheeseburger doesn't taste very good. You don't, it's not as good as that first cheeseburger. I like cheeseburgers. And someone else might be vegan. I'm not. But again, there's a happy place.
Yeah.
So I agree with you. When you were trading yourself out of not use the word trading because I just said not to do that, but what I mean by that is getting yourself out of a downturn. Don't be afraid of this stuff. Like you said, start fresh, start new, release the bad juju. The money's gone. Don't try to make it back. Your job now this is day one. Everything before day one doesn't matter. Everything before day one doesn't count. Everything before day one is not your money anymore. It's some guy named Stan. He lives in the Midwest. Too bad. He has your money. It's okay. You'll get it back from somebody else. Or you'll create it, whatever it might be. But that's good.
Yeah.
Day one. And move forward from there. Begin anew. The last stage, right? Stage 1, stop losing. Stage 2, just put some profitable days together, profitable months together, weeks, kind of get back on the bicycle, get back on the train, get in the right direction. Stage 3, begin anew, use those tools that you learned from the drawdown to build another 7, 8, 10, 20, 50 years of profits.
Right. 3
steps. That's what it is. That's what it is. I believe it is.
Perfect. And John, if you had kind of one last piece of advice or wisdom that it could be trading related, it could be life related for everybody watching, what would that kind of be?
Well, I'm pretty big. It's funny because for me, I'm pretty big in the life aspect of trading. The actual, like I said, I had someone tell me who I respect very much that, I like to help other traders, teach them kind of what I know. And he made a comment. He's like, listen, you trade, the way you trade is unique. It's not cookie cutter. You take a lot of your talents is innate. You take a lot of stuff that it's hard to translate to others. I don't think it's that hard. I do, but for me, I just see it like I see it one way through my eyes, and I think every trader who has kind of their own style sooner or later sees things kind of like in the Matrix, sees things through their eyes.
Right.
I think the mental aspect. So if I had to kind of give you one parting note, would be that, you know, keep yourself in the game mentally. They don't let, don't let if you're having a hard time, wear on you, and definitely don't let it wear on your outside life. And it's going to. Listen, I mean, making money is emotional. I mean, it just is. I mean, people can tell me all they want. Oh, I'm not an emotional. Oh, bullshit. Okay, if you're making lots of money and then you're not making any money, you're going to be emotional. Sorry, I hate to break the news to you. Okay, I mean, you may be less emotional than some. Some are more emotional, some are less, but you're going to be somewhat emotional. Keep it at the job. When you sign off for the day and you have time to reflect, maybe give yourself an hour, whatever long it takes you. Maybe you're in the office going through your journaling, you're thinking about the day, especially during the losing streak. This is very important because during winning time, it's, you're kind of in good spurts, but during losing time, it's a little harder. Reflect. I don't want to say mourn because that's not a good word, but be cognizant of what's going on. Understand, where you are in your journey. Give yourself whatever time you need. Then when you shut the door and you leave your office, let it go. Let it go. Doesn't mean you're not prepared for tomorrow. Let it go. Enjoy your life. Say, have a nice dinner. You're married, enjoy your wife. You have kids, enjoy your kids. Okay? This is going to be here tomorrow. This is not going anywhere. The job is not going anywhere. There'll be a market, there'll be stocks to trade, there'll be things to do. Okay? Don't take the losing home with you because it's very easy. I've done it. And I think people told me they haven't. They're probably lying, or maybe they haven't lost enough, or haven't had a substantial losing streak. But it bleeds into your life. But if I can give you one bit of advice, and I think it would help, is that don't let it. Just leave it there. Leave it there. Close the door. Come back tomorrow. Morning when you have your routine. Remember, you have the routine. Routine is important, especially in a losing streak. You have your routine. Start again. Day one. Winning trade, one trade at a time. I promise, do the right things. I promise you'll be out of this slump that you're in. Before you know it, you'll be profitable and things will be great again. I'm telling you, I guarantee it.
Excellent. Well, thank you very much, Jon.
Thank you, Richard. I enjoyed my time, and I hope people, learn a little something and learn a little something about me. Again, anytime we talk about stuff, I'm more than happy to join you.
Yeah, I think maybe it was last year, or maybe it was in the interview that we did. We talked about risk, we talked about mindset. You like to talk about the unsexy part of trading, which is the important part of trading.
Yeah, because the truth is that without this, you're not anything you do doesn't matter. I mean, this controls everything, right? I mean, as people, that's what makes you make your decisions. And if that's not right, if that's not in the right spot that you need to be in, it doesn't matter how good you are, no matter what tools you have. Okay, you're not going to use them properly.
Right.
Yeah, you have the tools. Now, the brain makes you use it properly.
Exactly, but that's why it's so important. So,
yeah,
Jon,
it's definitely underlooked. There's no question about it. It's not like you said. It's not sexy. People will be like, "Well, I want to see the charts. How do you make the money?" Look. Honestly, there are 1,000 people out there going to tell you their systems. Okay. Personally, I think you can pick one that you find, somewhat intriguing to you that fits your personality, and then make it your own by putting your stamp on it, adding a little wrinkle that only you have, your flavor, your spice. That works best for trading. I mean, I didn't invent what I do. I didn't, I took,
bits and pieces.
I named Mark Drachman, who's no longer with us. He trained me in the mid 90s. He was a, incredible teacher in my opinion. And I took what he had and I turned it, and I used my special spice on it and turned it into my trading style. And people who I've helped along the way, they've taken what I've told them and they've made changes and made it theirs. It's got to fit you, right? Trade's personal. Whether you like it or not, being a manual trader is your personality kind of is part of it. There's no question about it. Unless you're programming a machine, in which case it's a completely different story altogether. Not for this interview.
Not for this discussion. No problem. Jon, Again, I always enjoy talking with you. I think everybody watching can take away, a few bits of gold there. So thank you again for your time. To
For
everybody
Richard.
watching, make sure to thank John in the chat. Leave a like down below if you're enjoying this, and we'll be right back with our next presenter. Thanks again, John, for your time.
Thank you, Richard.
Okay, welcome back, everybody. I'm extremely excited to introduce the next guest and speaker of the TraderLion Conference, our very own Nick Schmidt, who is the co-founder, one of the co-founders of TraderLion, as well as DeepView. He's the brains behind a lot of the design, and I'm really excited to have him share today kind of his trading strategy and how he interprets the markets. It's definitely a little bit different than my style. It's more kind of longer term oriented, focused on keeping it simple, weekly charts, that's key. And I'm really looking forward to personally kind of taking bits and pieces and golden nuggets from this presentation. So, Nick, thank you so much for doing this. And yeah, I'm excited. Let's go ahead and dive right in.
Thanks, Richard. First of all, before I get started, if you guys are watching this and enjoying the conference so far, if you can just hit the like on the video below, that tells YouTube to recommend it to more people. We get more exposure, and then ultimately, more donations for St. Jude. So I'll jump right into it. My strategy is, or my presentation is why less is more, simplifying your strategy. If you follow me on Twitter, you know that I post trades, my trades far and few between, and it's for a reason. I'm taking trades far and few between, and I really emphasize simplifying and self-awareness and understanding why each part of your strategy exists. So the presentation today is this was a really popular tweet, one of my most popular tweets, and it's kind of the overall goal of this presentation. So most traders look for things to add to their trading systems, but most would benefit if they looked for things to remove. So, everybody's looking for the next new thing. One of the top Google searches for traders is about indicators. People want, just something that's they can add to their system that's going to give them the results that they want. And so I'm just going to kind of show an opposite perspective of that. So we'll start. I'll give you a little bit about me, the reality of trading, the complication trap. I'll go into my personal trading journey, which I think a lot of people will be able to relate to. The simplicity formula, finding your edge, being adaptable, and then finally I'll jump into examples this year of trades about my approach.
And Nick, actually, before you go in, just about your tweet there, I think it's so true and something I've noticed, talking with newer traders as well as, some of the top traders who I've interviewed and my own personal journey. At the beginning, I had RSI, I had MACD, I had, 5 different indicators, and not to say that those don't work, but having so much in a search for clarity and a search for the easy answer for interpreting price action that says buy now, it's going to go up guaranteed. It's actually the opposite. It's removing stuff, focusing on price action volume, which I know you do, especially on the weekly charts, which is even more longer term. That's what really provides the clarity at the end of the day. And I'm a tinkerer. I like designing indicators. I found some that help me, but just for everybody watching, especially if you're new, you're probably going to go through a phase where one day it's the RSI that you like, one day it's the MACD, and there's this magic combination that people say gives you guaranteed returns. There's no real truth to that. You have to find what works for you. Focus on one indicator, price action above all else, and that will give you that clarity that you're looking for. So yeah, I love that tweet. And I think it's 100% true. I've seen it in my own journey as well as the journeys of many others.
Yeah, and just like you said, not to say, not to discount any indicators or anything like that, and I'll dive into that in my presentation. I'm not saying, indicators are worthless or, different points of view are worthless. It's just, you really need to understand what each piece plays in your own system and focus on that. So I'll jump right in. About me, I have been trading for 11 years. I do say investing, and on my Twitter profile as well, I put investor. And I, for some reason, do like identifying as an investor a little bit more because I feel like that you'll see kind of aligns with my approach. Investors usually, I feel like they tend to maybe not use technical analysis and they're more looking for very long-term value, but I do bring the trading aspect in of everything revolves around technical analysis, and you need the charts at the end of the day. I have 2 very funny and handsome dogs that I post on my Twitter all the time. I highly recommend if you are a trader that you have a dog, right? Whenever I get extremely stressed out or anything like that, I take these guys for a walk and it makes it a little bit better. So, shout out to these guys. I'm also, as Richard mentioned, co-founder of TraderLion and DeepView, and you'll see this is actually my first presentation that I'm really giving, and so that's why this is pretty cool. I kind of am in the background. I'm a little introverted, but you'll see, I kind of have the same me, Richard, Ross, Rye, we all have the very same viewpoint on the market, and we agree on, a whole lot of things, and that's what, TraderLion is all about, and I'll get into that in an upcoming slide. So
I think that's in Market Wizards, by the way. Have a dog; it'll make you a better trader. I'm pretty sure.
is it? I was going to start mentioning how, every single person has a dog. Stan Weinstein has a dog. Mark Minervini has a Chihuahua, but I'm just messing around. So the reality of trading. So this will make sense as we get through to the end of my slides, and this is really what forms how I trade. So TraderLion, it's a trading education business. It's a brand, and it's a passion. However, most people come into trading because they're looking to make quick money, and that's so far from the truth. 95% of traders lose money. I don't know if that's a verified stat, but just from my observations in my career over the years, it sounds pretty true. Most people lose money, and so if somebody's looking to make more money, I'm not interested in convincing that person to try out trading. If you decide that you want to be a trader, which I recommend, it's been great for me. I've seen it transform many lives. It's definitely something I believe in. And if you decide that for yourself, then that's where, I really enjoy helping people and, helping them get to where they have to go. But I think the overwhelming majority of traders that lose money, I think, is because, they get into it for the wrong reasons, and they think that, and it's not their fault, but they think that, it's there's a foolproof method, or it's an easy way to make extra cash, and that's not the truth. So the S&P 500 averages about 10% annually. So realistically, for most people, you should just buy the S&P 500, buy the Nasdaq, if you have a long enough horizon, right? And that's it. So this kind of forms my ideology. Now, the overcomplication trap that I feel like happens. First off is misleading simplicity. What I was just talking about, people get into trading for the wrong reasons. So you get drawn into trading because of easy foolproof indicators or systems. And this indicator has an 85% win rate. You think you're going to get an indicator that's just going to do your trading for you, or three patterns that you just need to learn and memorize, and now you're going to be rich. And it doesn't work like that. And so people get drawn to trading, I think, because of the misleading simplicity of what trading really is, which leads to the overload of tools. So often traders, they just have too many layers, and they don't understand the purpose of all these layers. And it's, you might have been introduced to trading because somebody was pushing their indicator, or their specific setup, and then you didn't find success, so you jump to the next person, and now you picked up a new indicator. And throughout your journey, you pick up all these different layers to your trading, and you may have success with them at points, but and so it's confusing, because if you've had success with an indicator once, you might believe that you need it in your strategy, but I think it's the total opposite, and people need to peel it back and understand, okay, what purpose does each indicator or tool in my strategy serve? So just a reminder as well, all indicators are just derivatives of price and volume. So they are great. I use a couple indicators, which I'll get into myself. Indicators are good, but if you don't understand how to interpret price and volume, then and you don't understand trends and price and volume first and foremost, indicators aren't going to help you out as much as you think they will. You need to first understand how markets work. price and volume, right? Supply and demand, and how things move strictly from a price and volume basics. Once you get that down, then you can add indicators to help you interpret it in a better way. But you always need to remember that every indicator is just a derivative of price and volume. So they're not gonna replace your understanding for that at the core. Now, embracing diversity. Why do I love the TraderLion conference? So, one, exposure to various approaches. The conference showcases a wide range of successful trading methods. Everybody that we bring on is a proven successful trader in their own right, and they all have very, very different approaches to the market. And so I love that because you can then find what you're compatible with. You can identify strategies that align with your personality and with your beliefs. And I think this is really valuable because the third point here, avoid blind replication, instead of copying one trader's strategy exactly, you can adapt different elements from different traders that resonate with you. And I think that's really important because you know, uh, if Mark Minervini is a proven successful trader, he's one of the best out there, and you cannot deny his track record. He's one of the greats. But you know, at the end of the day, you're not Mark Minervini. Mark Minervini has had a bunch of personal experiences through his journey that shaped who he is. And yes, he has a proven strategy, but you know it's not going to resonate with every single person. And like for me, I've learned from Mark Minervini and taken pieces of his teachings and ultimately brought it into my strategy. But I can't replicate him completely like black and white because I'm not him at the end of the day. So I love the TraderLion conference because you're seeing proven successful trading methods and a very wide uh, variety of them to kind of see what makes sense. So I really emphasize crafting your own path. So when I get into my strategy in a little bit, you're not going to see anything that is completely new. You're going to see things that Stan Weinstein talked about, Amit Rai, one of our co-founders of TraderLion and DeepView, William O'Neill, Ross Haber, another co-founder, and Oliver Kell. And you're going to see, little bits and pieces. I didn't reinvent the wheel. I just learned from these guys who are proven. They've put out a lot of wisdom. They've done a lot of research, and there's no denying that what they put out there. You can check it out yourself. There's all different pieces of what they've all taught that have resonated with me, and so my strategy ultimately comes down to little bits and pieces about from each one of these legendary traders. So my personal trading evolution, I think that a lot of people can probably relate to this on the left. So in 2014, the S&P 500 went up 11%. I finished minus 15%, and I had over 600 trades. So going to my first slide, if I bought the S&P 500, it would have saved me a lot of money and it would have saved me a lot of stress. So that's why I'm being completely honest. If you are, most people, if you have a full-time job, um, you can't, you really can't focus on the market all the time. And so sometimes, you just have to be realistic about what it is. If trading is something that I love, and I know, like, Richard loves it, Rye loves it, Ross loves it, Oliver loves it. We love it. But if you don't love it and your goal is to just make money, then maybe you should just look at the fact that, you can buy the S&P 500, not worry about it. So I'm just putting this here to kind of showcase, here's where I was at 600 plus trades in a year. I was grinding my ass off, and I not only performed less than the S&P 500, but I lost money. So that's just, really demotivating and frustrating, but we all start there, right? Fast forward to 2024, The S&P 500 right now, I believe, is up about 62%. 16%. I personally this year am up 62%, and I've placed 24 trades. And so you can tell, there's been a huge transformation of from where I was to where I am here. And when I talk about, if you're just trying to make money, just trying to compound your money, but you really don't have an interest in trading or something like that, the passion about trading, then buying the S&P, is a better option because that's what fueled my personal trading strategy eventually. Because I was thinking it's really disappointing to know that I placed over 600 trades, and if I would have just bought one and never thought about it again, I would have done a lot better. And I think a lot of people are in this situation. So my kind of philosophy became, okay, I'm working all day trying to make money in the market, and it's having the opposite effect. So my philosophy kind of became, I want the market to work for me, and it's and I'm gonna let it do that. And I'm gonna try to remove myself from it as much as possible and let the market work for me. And I say I'm an investor, but the trading part of me allows me to beat the S&P 500 by identifying, certain stocks and using technical analysis. But it's still very few trades where in July or August now, it's August, and this is a very low amount of trades for I know most people watching this. My early trading experience, so information overload. I analyzed every piece of information available. I thought that more data led to better decisions, and I spent a lot of time thinking and over analyzing. So, let me run through the rest of these before I elaborate. But poor results, inconsistent performance. I had no confidence, right, because of inconsistent performance and no real plan. I may have had a plan, but that plan changed all the time. It wasn't consistent, and this is a cycle. If you have inconsistent performance, you will never have confidence. Confidence comes from seeing consistency in your equity curve. When you know that for the past year, 5 years, you have a rising equity curve and you are not, having any major downturns because you're removing the possibility of big setbacks just by being disciplined. When you have that evidence in your own equity curve, you have a lot of confidence, and that confidence then, compounds on itself. And when you're confident, you can think clearly and you can make better decisions and you can size up when you need to. And, everything starts working in your favor. I'm a big believer in momentum. And when you get the momentum going and you have confidence in yourself, that momentum works for you. But when you have inconsistent performance, you're going to have no confidence and the momentum's working against you, right? Like, now most people in this cycle are hoping that they're going to have one trade that they oversize in that works in their favor, that will give them their confidence back, and that cannot, be farther from the worst outlook you can have on in the market. I had a quest for control, so I consumed data from every source to feel in control. Again, I analyzed every piece available. I thought it would make better decisions. I was trying to find certainty where it doesn't exist, and I needed a rational answer for everything. So I think, a lot of people overthink things because the market is such a difficult environment because we have no control over most things. We can control when we enter, when we exit for the most part, and our risk, and that's about it. But everything outside of that, is uncertain, and also it's irrational. Richard, I'm blanking on who said the quote, but markets can remain irrational longer than you can remain solvent.
Yeah, I don't know
Uh,
either. I think it's just a common one out there for sure.
Yeah,
I'll
that
Google it right now.
is
Yeah.
that is so true, right? Like the markets aren't always going to make sense. And back when I was trading in the beginning, I needed to make sense for everything because if I just lost on a trade, but it didn't make sense to me, like rationally, I would try, like I would spend a lot of time trying to figure out why did that happen or something along those lines. So, you're looking for a rational answer for everything, and the market does not work like that. It can be very irrational. It doesn't, have to make sense, and there's no certainty outside of, what you put up to risk and your entry and exit. So, you need to focus on what you can control. And back then in my early trading experience, I was focused on everything but what I can control. And, it was a disaster.
It was John Keynes. He's a
John
economist.
Keynes,
Yeah.
awesome. So that ultimately brought me to reflect on myself. I was losing money and I was frustrated and I loved trading, but I loved trading, and my first couple experience trading, I got lucky and made money. And so it's really frustrating that now that I'm dedicating more time to it and focusing on it, uh, I'm just getting not consistent results. I'm losing money, and um, I can't figure this thing out. So I had to kind of reflect. Do I want to know a little about everything? Do I want to feel smarter and more informed than everybody else, or do I want to make money? And I think a lot of people can probably relate to this, like when you're looking for a rational answer for everything, or if you're trying to, somebody asks you, like tells you a stock's down and you're saying, yeah, it's because this happened or whatever, you're trying to just give a reason for everything, and everything doesn't need uh, a reason. And so I guess I was trying to feel smart and informed, but it wasn't playing out in my trading. And so, at the end of the day, what do I want? Why am I trading? I want to make money. So then we have the simplicity formula. So this is what I call the simplicity formula. I'll go over it really quick and then I'll walk through me filling it out kind of for myself. So the first part is, what is your edge? Second, what information is crucial for you to execute it? Anything that's not directly relevant is distracting and holding you back. So sounds, probably pretty obvious, but this I think is the core of how I got to where I am, and what I think a lot of people could ask themselves just to see which parts of their system are they need or could be distracting. So, what is your edge? Only you can answer this with self awareness. I point this out, put a little key here. Self awareness is key. I think that that is probably one of the biggest things. I can make a whole presentation on self awareness uh, on its own, but that's not what this is about. So I'll try to, stay on topic, but self awareness is so important. And that's again why I love the trading conference, because you're exposed to all these different strategies. And if you're self aware, you can see the elements that, relate with you and what you believe in. So there's so many trading styles. There's so many um there's so many ways to make money, but it has to match your personality, and it has to match your beliefs. And this is an image from Brian Johnson. He is not a trader, but I think it's very relevant. Who you think you are, we think, we know who we are, but who we actually are, self-sabotage you. Self-sabotage was one of my biggest trading problems looking back in the very early times of my career. And so you just have different versions of you, and it's complex, but we'll stay on topic for this. But self-awareness is very, very important, and only you can answer what is your edge. So this is me filling it out, the simplicity formula. What is my edge? I use it. My edge is using price and volume to find great risk reward opportunities in long-term trends. What's crucial for me to execute it? Weekly charts, price and volume, and indicators that help me interpret price and volume: the 10-week moving average, 30-week moving average, and enhanced volume, which is just an indicator we have on Deep View that I'll show you a little later on in this in a couple minutes, but it's just helps me focus on the volume that I want to see and not every day. Makes things stand out a little easier. So on the left here is same thing that was up here. And then here's my thought process. Here's how I kind of got to this. So about me, I'm indecisive. I'm naturally an indecisive person. It's one of my worst qualities. And I don't want to make a decision every day. And so I, for a long time, was focused on daily charts. And again, I'm not bashing on daily charts. I know people who make way more money than me in the market that use daily charts. Daily charts are absolutely great. It's just that for me, you know, I would rather get one candle per week than 5 candles per week and have to decipher each one. It just makes more sense for me. I like holding trades. A lot of people hate holding. They're not patient, but for me, I like holding. And I do not like entering or exiting. It stresses me out again because I have to make a decision. Uh, the more I watch the market, the more tempted I am to do something. Again, this is self-awareness. This is from looking through my trading history, looking through my results and being brutally honest with myself. And I noticed that the more I watch the market, the shorter time frames that I watch, the more tempted I am to do something. And for me, there's not always something to do in the market, so that's just bad news. My best trades, again, this is a self-awareness thing. My best trades were held for multiple months. Your best trades may be multiple days. It could be multiple hours. Everyone's different. But from when I clearly viewed my best trades, they were held for multiple months. And so, again, that brings me to how I came to weekly charts. Weekly charts promote patience and they lead to fewer, more impactful decisions. And I'm a firm believer that longer term trends are much easier to identify and time than shorter term trends. So I think that, that's why everybody that invests for retirement in their 401k and stuff, we know the long term trend of the market is up. And so when you have a very long time horizon, you're kind of reducing the risk and you're working with the longer term trend. And so I think that on a weekly chart, if you identify a trend, you have like almost more room for error, and it's just it's much easier to spot versus uh an hourly chart or an intraday chart. I think that longer term trends are just a lot easier. I don't know if there's data behind that. There could be a personal thing, but this is just something that I really believe in. Now, something that is another big part of what led to my transformation in the market is avoiding rigid thinking. So the market is not black and white. Again, people, uh my second slide talking about people think the market's simple, it's because people think it's black and white. There's a correct answer and a wrong answer for everything, and that is not the truth. Uh, you need to think independently. You need to be creative and adaptable in your approach, and flexibility and open-mindedness are key to success. So to kind of, help prove this point or explain it, I want to use 2 examples. So one, why do high tide flags work? So this is a graphic I made like 6 years ago. And it's a valid graphic. It's good, right? The average high tide flag is 3 to 5 weeks. The depth is 10 to 25%, and the prior uptrend is over 100% in 4 to 8 weeks. So that's all. This is still very much correct today as it was back then. But why do they work? Is it do you need to understand why does this pattern work over and over again? Not all the time, but like why have we identified this specific pattern for working? And so I think you need to be aware to emphasize the independent thinking and the fact that the market isn't black and white. You need to be aware of, why these things work. So forget about all these specific numbers, because in the very beginning of my trading career, I would take out or not take out, I would measure and see, okay, is this 100%? Is it, is this 3 to 5 weeks long? Is this depth 10 to 25%? If it's 26%, it's not a high tide flag, right? And that's a very rigid way of thinking. And so when you think of the high tide flag, why does it work? What's going on? It works because when something goes up 100%, it doubles in such a short amount of time, like 4 to 8 weeks. Normally, you're going to get a lot of profit taking, and everybody's going to flood for the exit to take their profits, and the stock's not going to hold up. It's going to come down. We've seen it over and over again. But with a high tide flag, you build this base that's near highs, which tells you that despite the fact that this stock more than doubled, people are not interested in selling. Some people are selling, right? That's why we hit this, we pulled back, but it's being bought up for the most part. And so that's what fuels the next breakout, is because this stock went up over 100%, and nobody's selling. More people are buying. So that's why it ends up working. And when you understand things from that perspective, it gives you a more flexibility to look at each individual high tide flag pattern um, just individually and be able to make your own kind of flexible approaches to each and every one of them. But you really need to understand, you can't just study and look for these specific numbers. You need to understand like what's going on, why does this pattern make sense, and have a deep understanding of how the market works, price and volume again. The other point that I wanted to ask was, what does stops at the 50 DMA mean? So one, you set stops directly on the 50 DMA. Two, you set stops 1% below the 50 DMA. Three, 2% below the 50-day. Or four, no hard stops, give it until the end of the day. And this is why trading is freaking hard, because none of these answers are right. I know that when I first started trading, I would put my stops directly on the 50 DMA. I think that's wrong, because it's a little it's silly, right? We're probably going to shake out below, but there's no wrong or right answer, and that's what makes trading so difficult. So if you're following a trader and they're saying, I'm long this name, my stocks are at the 50-day, what does that even mean? Are they on the 50-day? Are they 1 or 2% below the 50-day? Or are you giving it until the end of day to see, how things shake out? And there is no right answer. And that's where kind of the art side of trading comes in, and the self-awareness part. And I noticed that, when I would be early in my trading career, I would set stops directly on the 50-day. I would notice it would shake out a little below. And so I ended up moving my stops about 2% below the 50-day. Then now what I do most times is I actually have no hard stops. I'll give it until the end of the day or even end of the week to see if it closes above. And that's what I do. But that's what I do. And sometimes I'll give it until the end of the day, and I wish I set my stops 1% below, because like in hindsight, that would have saved me a lot of money. But then there's also other times where I'll set my stops 1% below, it shakes out 2% below and closes above, and I wish I would have given it till the end of the day. So the market's very dynamic. It's not black and white. There's no correct answer for these things, and you need to just look at things independently and make your own conclusions. So now we'll jump into my approach. Weekly charts, as I mentioned, for patience and fewer decisions. It helps me maintain a long-term perspective and avoid impulsive trades. And then I look for what I call character changes, which are subtle shifts in a stock's behavior. Accumulating subtle character changes helps build conviction and identify long-term trend changes. So we will jump into a couple examples here. So the first one I'm going to go over is a firm, and I embedded a tweet here, which is a video I made covering this exact scenario. This slide deck is available for free you can go to the link in the description below, sign up for a free TraderLion account, and you will get not only my slides, but you will get all slides for every presenter in this conference, as well as notes. So when you get my slides, all of my tweet embeds that you'll see, you can click on and follow the thread, because I've talked about these on Twitter X as well. So this is all interactive, and you can click it. So character change. What do I mean by character change? So a firm, you can see, was clearly in a downtrend for I said I'm a big believer in momentum. So, the trend is your friend. That's a very common saying. You want the wind at your back. And so a firm for a very long time was just, there's no reason to touch it. So it came on my radar some point over here by number 2. And so there was no reason to buy it when it was here, but I took note that we have a higher low than the previous low. So that's, one thing that I noted. Then I look back, and this is my enhanced volume that I spoke about earlier. And so what this does is all my volume is gray unless it's above average volume that closed in the upper 50% of the range. So we know that most of it is buying pressure. So looking in hindsight, I say the first character change was, okay, we have this cluster of, strong closes here. And we bumped into the 30-week. This is the 30-week here. So there's nothing, you should not be buying here. It's just a character change. It's not a buy signal, but you want to take note. Then a firm comes on my radar, and we've now made a higher low. So that's the second character change. Now we have 2 character changes. Now we want to pay attention. Third character change, we have more volume come in, above average volume with strong closes, and it gets us above the 30-week moving average, which you can see is not within this stock's old character. So we are now above the 30-week moving average. And I'm still not buying here. I'm still not buying, but these are all, now it's just building evidence for we are entering a new trend, and the character of this stock is changing. Now where I enter the stock is I've been watching this. Most of the time I'm just watching and waiting. And I've been watching this stock. It comes in, it pulls back, and right here, number 4, it makes another higher low. So it looks like, we're starting an uptrend, and it found support on the 30-week moving average. So that's a huge character change, right? Like this has never done that before. So now you can assume that with all these different character changes, it looks like we are now highly likely to be in an uptrend. And so or my thought process is I can buy here and set my risk, right below here. If we make another lower, if we undercut this low, I'll be stopped out. I'll be invalidated, but that's my thought process. You now pull down, and you have all these character changes that are adding up. And so everything is about risk reward. I don't care about win rate when it comes to trading. It doesn't matter if you win 20% of the time or 90% of the time. That has nothing to do with your success as a trader. Your success as a trader comes down to how much are you risking for how much of a reward. So right here, buying this weakness, I don't do price targets, but just by looking at the left side of this, we have a lot of ground we can make up over here to the right. And so this is where I finally would get involved, or did get involved. And, um, again, we have another pullback. Here's another higher low. Again, the 30-week moving average supported it. Again, another higher low, 30-week supported it. Look at all this volume. Like this is just a bunch of character changes that add up, and there's many entry points here, many entry points that you can get. If you click this presentation, if you sign up for a free account and you click on this as well, you can watch this video, and I believe this is a thread, so you can kind of follow my thought process.
Nick, before you move on to the next one, just a question. At point number 4, are you buying What are you buying the weakness specifically, or are you waiting for it to form that higher low and buying the next kind of blue candle as it pushes higher? What was kind of your entry point here?
That's a good question. So you in in my opinion, you always want the support to prove itself before you do anything. So um I kind of waited for this week to find support, and then uh once it kind of makes that low and now it's coming off the strength here, um you can enter it. So it's you're buying the strength right after the weakness, but yeah, you don't want to just catch the weakness blindly and hope that it stops at the 30 week. I was definitely waiting, saw that it stopped at the 30 week, and now, okay, let's enter and make that move.
And do you make most of your decisions on a weekly basis, like Thursday and Friday, so you can kind of see how that weekly bar will turn out?
No, I've gotten asked that a lot actually. That's a really good question. No, I kind of will make a buying decision at any point during the week. Um, if I see the opportunity, I don't wait for the candle to finish. However, if I'm exiting, depending on the situation, I will try to wait for the candle to finish. But entering it, I will enter Monday through Friday. It really doesn't matter.
Perfect.
Um, Another tweet that I posted and was pretty popular, and I want to talk through now the specifics of that. And again, when you click on this presentation, you can click this, open it up, and see I've documented my entire thought process in real time on both of these trades. But I'm a position trader. My time frame is much longer than most. Two names I've been slowly building a position over the past few weeks: APP and SMCI. And this was on January 6th. So first, I'm going to walk through APP. So that tweet was over here, and this was my most recent buy, but I did have a prior buy before that I got stopped out and had to rebuy. So I'm going to walk through the entire APP character change. So this came on my radar about right over here, if you can see my mouse.
Yeah,
Oops.
we can see.
And so now these character changes, I'm not catching them all in real time, but I just look back and add the evidence. So, oops. Uh, the first character change is, look at this. Ever since this downtrend, since the end of 2021, we have, this is a 10-week moving average. We have failed to ever get past that 10-week moving average. So the first character change is we just finally broke above that 10-week moving average. The second character change, or maybe part of the first, but we've got now this huge volume on top of breaking the 10-week moving average. So not only did we just break the 10-week, and it's a huge character change because that's totally out of the norm for this previous stock's personality, but we also have big volume doing that. I'm still not going to get involved here though, right? Because this is like catching, in my opinion, a falling knife, and it's still way too risky. And most people, if you would have bought this volume right here, would have been stopped out right here. So again, just being patient. Now, the third character change, we come down and we did shake out below the 10-week, but still we made the higher low. And essentially, I consider this we held the 10-week. We shook out below, but we held the 10-week and made a higher low. So at this point, okay, now where this is clearly a change in character. We have broken a moving average that we have not been able to for um over a year, and we are now putting in a higher low. So now you want to pay attention. You We start trending up, and again following this 10-week moving average, holding this new average that again it couldn't get above, and then more big volume comes and breaks us right through that. We start consolidating a little bit, and again number six right here, we're supported at the 10-week moving average. So this moving average that's supporting us this entire time up was resistance the entire way down. So that's a clear change in character. So where I got involved was over here, before five, and my entries are very particular. I feel like they're more defined, where my exits could depend on a variety of things. It could depend on market conditions. It could depend on I'll cover my SMCI trade right after this, and that I just sold into strength because it was just a very crazy run. So my sells could be on a bunch of different reasons, but my buys are, once I have enough evidence, once there's enough character changes in a stock, I will put on a position. And so, over here, this might have been like earnings or something, but over here, if you're watching this stock now after it just made the higher low, any of this weakness down to the 10-week, you've really got to be hawking this trade, but that's all buyable. And then, right here again, this is buyable. And so I bought and bought, and I actually got stopped out right here on this candle in the base. And again, it's, in hindsight, that stinks, but um, that's why trading's hard. But my thing was, I was watching, we held the 10-week this whole entire time up, and then we broke the 10-week. However, like I said, I like to give the benefit of the doubt. So I kind of set my stops near this low, and I was like, all right, if we can hold this low at least, I'll stay in. We undercut it, which ended up being the low of the base, of course. I got stopped out, but I was very fortunate because since I have been very familiar with this stock, I knew exactly how it trades, and I was very comfortable with the stock. So I knew we just had a massive run all of 2023. It needs to rest, right? It needs to rest, and it needs to digest its gains. Now, watching this, you probably notice I like to buy on weakness more than strength. So now watching this, I got stopped out over here. I noticed that this next pullback in the base made a higher low, and then this other one right here made a higher low, and this is right before the base ended and it broke out. So my exact thought process when I posted this tweet and I told you guys that I have been accumulating this position is, I know that this stock just went from, what is this, $8 to $43, and it has obviously massive institutions and buying behind it. It's having a very healthy rest. For a lot of people, this was very frustrating, but it's a very healthy rest. And if you look very closely when you're comfortable with the stock, you notice little cues like this, where, now we're getting to the right side of the base and you're making very subtle higher lows. Again, this is similar to Minervini's VCP, right? Higher lows, and then you can see it just getting a little tighter over here. And then we break out to new highs. So that's kind of my thought process with APP. And next, I'm going to jump into SMCI. So SMCI, I put this gray line right here to show you guys when it came up on my radar. So at the time this came up on my radar, it's one of the strongest stocks in the market, but I have no business buying it right here at all. However, when this happened, we had this, what I call a trend stopper. You get this big volume, big candle downtrend that, we haven't seen in a couple of years. And this is a trend stopper. We've had a long uptrend, and now it's natural. It has to rest. It has to digest its gains, and that is extremely healthy. And so I prefer not to buy breakouts, because for breakouts, I feel like they work right away or they don't, which is probably a good thing. But when I'm buying weakness and in bases, I feel like I'm able to manage my risk a little better, and the patience, I feel like, pays off a little bit. I feel like getting in when it's a little quieter just helps me stay in the trade longer. So again, this is the exact same thing that we saw with APP. Higher lows over here in the right side of the base. I noticed this stock right here, and when I look to the left, respect for the 30-week, which is this red line, but no respect for the 10-week. So right here, of course, again, no respect for the 10-week. We're just building a base, and we can see that we've now built three support. We've came down 3 times to this support level. And on this one right here, we also noticed that the 30-week moving average, which over here it is respected, the entire top trend has now caught up. So now you have 3 touches on support in a healthy base in one of the previous strongest stocks in the market. Plus, the 30-week moving average has caught up. Okay, I really want to pay attention here. So that's what caused me to keep buying on every single high or low here. And then, of course, I wish every trade could work out as good as this one, but it blasted off. And again, where I say my sell rules are very dependent on different contexts, because this one, some may argue, I'm a long-term trader, there's no reason to sell, but I sold somewhere into this because it went up like a large amount. I had a very big position. It went up a big amount in a very short time, and I just wanted to secure, my gains. And so I'm no longer in this one. But just looking at this volume on the way up and how it's kind of held it, I'm sure this will be another one ready to go again soon. And then the last trade that I'm going to cover here, because I think it emphasizes a lot about my strategy, is ON. So on January 6th, again, I posted a tweet. I've been waiting 7 to 8 weeks to see if we got back to this level. I started to build a position here on weakness. Love the shoes too. Now, if we look at ON, I got a lot of questions for this one, because when I bought it, it was below the 10-week moving average. It was below the 30-week moving average. And so technically, like, what am I doing, right? Like, you don't buy when things are below the 10 or 30 week usually. We're in a downtrend. And so this is where kind of the independent thinking and the flexibility comes in, and how at the end of the day, everything's just risk reward. So this line right here is where it came on my radar. There's nothing to do here again, so I just waited. But looking to the left, the reason why I did add this to my focus list is because this is a trend starter. So we have this massive volume. This is weekly, but something I've learned from Rye is highest volume ever. And when those things happen, it births new trends into stocks, because when you have that much interest and volume in a stock, you can't hide it, and it shows up on the charts, and it usually signals the birth of a new trend. And so looking to the left, I see, okay, we've got, higher lows, and we have this huge breakout trend starter, and I noticed it over here, but there's nothing to do. I watched it for a few weeks. I saw that it came down and made this new higher low. And so what did I do? I connected a trend line from here to here, and I said, if we make another higher low and come down to this trend line and hold it, then I will build a position. So I waited from here in September to right here when I posted that tweet, January 6th, where we held this trend line and made a higher low to buy this. And now this sat around and going nowhere for 4 or 5 weeks. And so it was a pretty boring trade. But once it took off from here, now I've got a lot of cushion. And now looking at this trade, it's pretty exciting, because you could see I drew this trend line up here. We've hit this resistance kind of twice. We've kept making higher lows, and we've broken through it. And we've now used that resistance as support, which tells me character of this stock has completely changed. This is probably right here the beginning of a new long-term uptrend. And I was fortunate enough to get in, right here at a very low risk entry spot, where when I entered right here, keep in mind, my stops were just at the low week. So I was almost stopped out over here, but I wasn't. And so now, I have so much cushion, I can really give this trade the benefit of the doubt and let it go. And that's kind of the stress-free kind of longer term approach that I really relate to, and where I find my success.
Nick, a few questions, sorry, on this one before you go to your conclusion. You you mentioned setting your stop at the low of that week. Um, is that typical for you that that's kind of your line in the sand, the week you buy on weakness? If it undercuts out that week's low, you're pretty much out of it.
It, it's something I do often, but it's not like a hard rule. It's just the way I look at it is I made this trend line over here, and right here this day kind of showed me, okay, we found support, or this week we found support at that trend line, and it's also higher than the previous low. So I told myself that, it just makes sense, right? Like this is now a confluence of a higher low and this trend line. So
Right.
it's like I want to buy it, I want to get involved. And so just to keep my risk low, I figure, if it does break that low of the week, then it kind of invalidates like the whole trend line and the higher low that I was looking for. So I'll just, get out. So that's kind of my thought process. Um, Sometimes, yeah, it's like again, it's not black and white. It's just kind of, right here because of what I was watching. It just made sense. It's just a very low risk opportunity, and it kind of did work with my thesis because if we did break that low again, uh, I it would have probably not continued up
Yeah.
or would have gone up without me.
No, that's helpful. And this is kind of one of the points of your presentation and your style as well. After you bought it, it pretty much went nowhere for 4 weeks before finally pushing higher. Um, I know personally, I don't really have that patience for it to oscillate up and down. Like when I buy a stock on the strength, I want it to go and then immediately have, be at a cushion, all of that. Um, Mentally, how do you kind of think about those weeks where your trade hasn't really made any progress, but it hasn't hit your stop yet? How do you kind of go about thinking about that experience and maybe offer some guidance for people like me who need a little bit more patience?
Yeah, no, I think it ultimately comes down to so I I focus on these weekly charts, and so I naturally now just expect to wait for things sometimes to play out. But for me, I personally love the company, so I was looking for a reason to get involved. But of course, I wouldn't buy if the chart didn't confirm it. But the fact that I love the company and the chart was confirming it, now that's just all right. I believe in it. I'll give it a little more time. And it was like so right after the week I bought it, you see it went up here a little bit, and so that was a little exciting. But then we chopped around, did nothing. But the fact that we did hold the low and then we pushed far away from my entry, that
Gave you confidence.
it gives confidence. Yeah, it gives confidence. It all depends. Like I used to look at my performance day to day, and so if one day my portfolio is down 1%, I would feel frustrated, even though it's out of my control. Or if I was up one day 5%, I would have a great day and I would feel really good about it. But now I don't review my portfolio on a day to day basis. It's kind of like or my performance. My performance now is a quarterly, so or month to month, but mostly quarterly. And if I can, as long as I'm producing results on a month to month or bare minimum a quarterly basis, then uh that's enough for me. And again, I really focus on how is the general market performing too, because I the whole reason I got to this longer term strategy is because I was working so hard just to underperform the market. And so again, when I did buy this, the market was really strong and in a good spot where it also gave me that extra confidence to wait this out because this is a long term trend that I think is really going to pay off.
And just two more questions on this. I know you've got your conclusion slides here. First, you mentioned that you like the company. you're kind of looking, for a reason. Obviously, if the chart wasn't setting up, you wouldn't have entered. But how much do you dive into the companies that you're analyzing and looking for entries in? What kind of metrics do you look for? What kind of stories do you look for? Yeah, what kind of, other than technicals, what are you looking to find a reason to make a trade?
Yeah, so I I don't typically like the reason I ended up looking at this stock was just because I bought the shoes and I started loving them. But that's not typical. Most of the time I will buy a stock even if I have no idea what they do. I'm a firm believer that price and volume will tell you everything, right? So if if
Right.
if something significant fundamentally happens in a stock, that the big funds think is good, we're gonna see it on the chart because the volume is they're not gonna be able to hide that volume and we're not gonna be able to hide that movement. So at the end of the day, like it really comes down to I believe that everything can be seen on the chart. However, I do I started my trading on CanSlim, and so I do believe in, quarterly growth and earnings and stuff like that. And um, when I am in a position, if it has that really good fundamentals behind it, it will give me more conviction to hold maybe during some weakness than if the same stock had no fundamentals behind it. Then maybe I'd be quicker to ditch it because I feel less conviction. But so I definitely use, fundamentals to help with conviction a little bit. I really don't care what the stock does at the end of the day. So that's like a tough thing because part of Can Slim that I really agree with is the N in Cam Slim, and so they need to have a new product, new management, new something, right, to have a new trend. But I think in most cases, like again, if there's something new going on and it's actually going to affect the stock, you're going to see the volume and the price on the chart. Where I think for a lot of people, like it's actually better to not be too familiar with the stock you're buying because you don't ever want your bias to overcome like what you're seeing on the chart. So
Overcome your
if
system.
I think yeah, if I think ONON, they could have the best shoes in the world. I can want them to go up, but if the chart is stops me out, I'm done. Like there's no more, I'm never going to let my bias or love for the company interfere with that. And so sometimes, yeah, the story will help a little bit with conviction, but that's I'm in a fortunate spot, like being 11 years into this, where I can balance that and I think a lot of new traders can't balance that, and they get the story or their bias to overrule their technical analysis, and that's something that you know you can't do. That's a no no.
Yeah, and kind of going along with this and your conviction and everything, and being that your time frame is a little bit longer, you're hoping to hold for months, versus more swing traders watching this might be looking to hold for weeks or even a few day move. After you bought here off the trend line, it settled for 4 weeks, then pushed higher, but then there was an earnings report that came out, and you can see the weekly bar. Nick, maybe you can point it out, where we gapped down and then eventually closed the week really strong. But in the daily noise there's a lot of, you know, that's a lot of emotion. I'm sure holding that, you feel a certain way when it gaps down. I know everybody's experienced that watching this. So walk me through your process and rules around earnings, dealing with gap downs. How do you kind of think about those instances? Because, being someone who's trying to hold for months and quarters, earnings reports and potential gap downs is something you have to deal with, and you have to kind of incorporate that into your system.
Yeah, I think there's a lot of like opinions on holding through earnings and not, but if you're looking to hold a stock for months, you have to hold through earnings reports. Like if you're a position trader or longer term, that's just a given. And so yeah, earning reports are a gamble because even if they're going to report good, the stock could go down. Even if they're going to report bad, the stock could go up. And so that's again why I only care about the reaction on the chart, and I don't look too much into like what they're actually reporting. But so for me, I'm very conscious of my position sizes. So I am always making sure my risk is always where I could sleep at night. So
Right.
uh, you know, when something like this happens over here, I'll be honest, I didn't see this happen until afterwards, and I was like, "Holy crap!" I'm glad I didn't move my stops up in hindsight, right? Because I still had them. But this is very stressful. So the ways to deal with stuff like that is, one, position size. You got to make sure that you're sized properly and you're not risking too much, because people think by sizing up they're gonna make money quicker, but the reality is, at least for me, when I size up, I'm quicker to exit a trade or make a decision more impulsively.
Hmm.
Where a lot of times things are fine. It's just I start freaking out because I've got too much money on the line. So position sizing is really important. Two, so for me, I had a very good start to the year for my portfolio, where my portfolio as a whole, like right off the bat in January, was up over 20%. And so that gives me, now I'm making I have momentum. My portfolio has a cushion, and so now I can give my positions more of a benefit of a doubt. And it helps with that. So that's again kind of how, when I speak about my exits, can depend on a lot of different things, where my entries are a little more precise. If if I wasn't up so much so early on in the year, then I would have been a lot more on top of moving my original stop up a lot tighter. So when this happened, I would have been stopped out. But if it didn't recover, I would have fortunately saved a lot of money. But since I was, I had a cushion on my overall portfolio, I have room to give things the benefit of the doubt. Overall, the market looked really good. Then I'm not so much focused on, really keeping stops tight, and I'm giving things more of a cushion, and so it just makes this bearable. But yeah, this I saw in hindsight, and I said, I'm glad I didn't watch that, live,
Real
because
time. Yeah.
that's stressful. Yeah.
Yeah, and at the end of the week, it just kind of actually is an extreme positive that got bought up so much and closed where it did, and respected that trend line area again. So you're seeing, in this one, there's not so much a moving average that it respects, but this trend line is a clear respect, and that's how you're managing risk and adjusting your stops on this one. One last question. Sorry, I keep delaying the conclusion here because it's so good. Um, you mentioned the trend stopper bar previously, which I think is great on SMCI. Here we've got a trend starter bar. Just for everybody watching, you can kind of see visually what it is, but how do you kind of personally define a trend starter bar?
Yeah, this isn't anything that where there's, a certain specific volume number or something that I'm looking for, but uh this is clearly a trend starter, because look at this volume, right? This volume is more than double or even triple anything we've ever seen in the past. So,
Yep.
and not only accompanied with that volume, we went up what, from $20 to 30 something dollars. So this was people with a lot of money piling into this. And when people of that when funds of that size pile into a stock like this, they're not day traders. They're not even swing traders. They're not looking to, like, sell in 2 weeks for a 10% profit. They're positioning themselves for something hopefully much bigger, much longer. And honestly, when you have this much money, this probably wasn't their only entry. I'm sure the reason why we kept this trend line going up is because they kept,
Buying
look at all these
weakness.
these
Yeah.
volume. Yeah, they kept buying weakness. It's been bought. And so when I just see something that Rye really taught me and put in my brain is highest volume ever, highest volume since IPO. all these different categories. But the basis of it is when you get volume like this, on the upside, like it doesn't matter what goes on for the next couple of weeks or anything. Like it may not play out right away because again, these guys are not day traders or swing traders, but you really want to be mindful of the fact that like this is likely going to ignite a brand new trend in the stock. And so that's what I did is I just kind of watched it, waited for some confirmation that, this trend may be a real thing.
Mhm.
And then we got it over here. And yeah, that's that. And then with SMCI, this one I don't color my big volume, but you can see the volume over here was pretty
Large.
large
Yeah.
on the downside. But again, you could just see like this stock has been in an uptrend for a very long time. The um the incline that it starts going up way more quickly, and that's usually a sign that we may be getting climactic or whatever. And so the trend starts going up a lot quicker, and then you get this huge volume down day with this huge screw you candle. And
Right.
that to me is a trend stopper. But I think more importantly, the trend starter is something that if you see something like this to the upside, I am so much more convinced that this is always going to lead to, like a longer term trend versus this on the downside. It's a trend stopper, but it doesn't mean the stock's done. It just means that, it needs time to work
To
itself off
base.
and to base. Yeah. And that's why, these little support things, especially in APP, if you weren't familiar with APP, uh, a lot of people kept buying the strength and having a very hard time buying the stock. It's very frustrating. But if you're familiar with how it trades and you're watching kind of like the base play out, it makes it a lot more effective because you just have a much clearer kind of view. A lot of people, I feel like when things base like this, a lot of people get disinterested and they put it off their watch list. Where for me, if a stock goes up like this and then starts chopping around, same with SMCI, I'm not taking it off my watch list. I'm putting it on my focus list, and I'm going to watch that base for every single sign that it's going to tighten up, where I can get in and just wait for the breakout. So most people are taking it off at this point, and I'm putting it on my focus list at this point.
Perfect. And going back down to just a second to ONON, the chart, that enhanced volume by deep view, wink wink, really helps you spot it. So there you go. All right, Nick,
It does.
no more questions. I'll let you get your conclusion going.
Cool, cool. So again, the conclusion, I just asked everybody to do the simplicity formula for yourself. So ask yourself, what is your edge? You need to be very self-aware. And what information is crucial for you to execute it. So anything that's not directly relevant is distracting and holding you back. So for me, it was options flow, news, MACD, block trades. Are these not valid? No, no, no. That's not what I'm saying. I've gotten good trades from options flow from all of these. And people can definitely be consistently profitable traders with any of these as well. But for me and my edge and the way that I trade and the bare minimums that I needed for my strategy, yeah, I've gotten some really good trades from an options flow that I saw, but at the end of the day, I'm much better off without factoring that in to anything that I'm doing, because it just adds confusion, another layer to things that you just got to be you got it in the market. You got to be quick. You got to be decisive. And like I said, I am not a decisive person, so anything extra that does not need to be there is just holding me back. Second to last slide here, almost done. So key lessons I wish I knew. So the more pressure you put on yourself to make money in the market, the more difficult it becomes to actually make money. I think that again is kind of what formed my strategy. So I think that a lot of people that can relate to my strategy here, because most people watching this are probably working a full-time job. or you're asking yourself, maybe I would trade better if I could trade full time. And so I just want to let you know that the more pressure you put on yourself to make money in the market, the harder that it's going to become. And this is something that people think that, oh, let me quit my job and trade full time, but that's usually that's a double-edged sword, because when you actually have more time to watch the market, you're doing a lot more dumb stuff, and you're making trades that shouldn't have been made. One undisciplined trade can undo months of progress, and all of my biggest losses came after my biggest wins. So this image here again is from Brian Johnson, the rascal 20% version of you causing 80% of the destruction. Through self-awareness, I said I can do a whole presentation on self-awareness, but from looking at myself and having self-awareness, it was very clear that I was letting one trade undo months of progress, and that one trade was usually coming after one of my best trades, because I was super confident and I put on more risk and I screwed up. And so, I think this is a really big takeaway for people, because if you take away the ability for one trade to undo months of progress, that's right away you're now ahead of most traders. So if you can identify, that 20% of you, which was, this for me, that's causing 80% of the destruction, you'll be in a much better spot. And so finally, my last slide, resources, TraderLion University. So the link is in the description below. It's a great resource. You can sign up for free, and the link in the description below, and you will get my slides, which have all the tweets embedded. You can interact and go through my threads, as well as notes for every single presenter and every other presenter's slides as well. So we've put together a resource. You just sign up for free, and you can you'll have all of the material from this conference, not only this conference, but all the prior conferences as well. And when you have a free account, there's tons of other stuff that you can register for as well. We have, I'm only showing 3 here, but we have 5 model books where we've broken down and done a deep dive on the best stocks of each year, and I've identified the themes of each year, and they're really good learning resources. And so go to the link in the description below and sign up, for this conference's resource to get the presentations, and then just browse around, see, we have a lot of other resources. And that's what I would recommend that you do. So yeah, thank you very much, Richard. If you have any other questions, but that's all for my presentation. So thank you, guys.
Yeah, not too many other questions, but yeah, just echo, check out Nick's slides, and go through the weekly charts for yourself, kind of bar by bar, because you'll kind of notice things that maybe Nick doesn't look for, but there's like additional confluences that can happen. A lot of, the starts of stage 2 uptrends, which of course is a big influence on how Nick views charts. Are the trend starters, and you've got a line of resistance across, you've got the bottoming formation here with ONON. So look through these charts in the slides for yourself, and learn from them, study them, because they're great examples. Nick, thank you so much for your time today and for putting this together. Any last words of wisdom or advice for people watching this, in terms of improving as a trader, life? It doesn't have to be trading related if you don't want to. What would you kind of leave everybody with today?
Oof.
No pressure.
A little bit of pressure. No, I would say
Get a dog.
yeah, get a dog. Get a dog. If you don't have a dog, get a
Saw
dog.
Dino in the background earlier, I think, actually.
Yeah, he's in the corner sleeping right there right now. But
Yeah.
yeah, get a dog. No, so trading is, like, at my very first slide, hits on how hard trading is, and how most people fail because they're introduced for the wrong reason. So I would say that you know um you need a support system. So I have a very close family, and also my co-founders, Richard, Rye, Ross. We're all very close. My dogs, I'm not even kidding, right? They're my support system. But trading is tough. And so I think something that's really important is that you have a support system in place. You have someone that or something where you can just talk about, different things. And most people aren't going to want to listen to you talk about stocks, right? They'd much rather anything else. But it's important that you have people that understand, whether it's a community on Twitter or something, or like I said, your dog or something. But trading is tough, and I think that it is really important to have a support system in place, and just people you can talk to that can relate with your experiences.
Mhm.
And that's pretty much it. That's what I would say. And then just again, the whole main point of this presentation: look at your strategy and peel back layers. Think of, does every single thing in my strategy serve a purpose? And don't look at it as like, maybe this made me one or two good trades. It's just, you know, what is necessary, what is not, and everything else that's not is a distraction. So yeah, support system, peel back the layers of your system, understand every single part, trade intentionally, and stop being so rigid in your approach. Look at things, from a much more flexible point of view, because if we
Understand the
go
why.
back, yeah,
Understand the
well,
why
understand the
behind.
why, because if we go back here, right, like this is why, alert services don't work, because it's like, put stops at the 50-day. What does it mean? And trading, it's not, there's no right answers. It's you've got to feel the market and understand the why, and the mechanics behind it. So
Perfect.
that's it.
Yeah, excellent, Nick. Thank you again for putting this together. Let us know what you guys think in the chat. Make sure to send your thanks to Nick as well. If you're enjoying the conference so far and you haven't yet, please consider a donation to St. Jude. That's the best way to pay it forward. Thank us for putting this conference on. Thank all the speakers. Go ahead and donate. Make sure to leave a like down below if you enjoyed this as well. Subscribe to the channel, and we'll be right back with the next, actually the end of today's conference. So thank you guys again. Nick, thank you, and we'll see you right back here. Cheers.
Thanks, Richard. Thanks, everyone.
All right, welcome to the close of the 5th day of the TraderLion conference. Hopefully you guys really enjoyed all the presentations. Let us know in the chat who you most enjoyed, maybe some key takeaways, favorite quotes that you heard today. We had fantastic presentations from Linda, John, as well as Nick. So let us know down below. Tomorrow, we've got another great group of presenters, Pavel Kicek, discussing algorithmic trading strategies for cryptocurrencies. I'll be presenting as well, discussing key lessons from market wizards for my interviews, as well as hosting this conference. Then we've got Eric Kroll from the Lifecycle Trade team discussing IPO and growth stock trade management, as well as the lifecycle advantage and kind of an update on the current situation when it comes to IPOs. And then lastly, we've got Peter Robbins and Agnieszka Wood discussing empowering traders through strategy alignment and self-control. So you don't want to miss those. Stay tuned. Tomorrow we'll be getting started again at 9 a.m. Eastern right here on the TL channel. Just a quick reminder, you can download the slides that you saw today via the VIP. You can scan the QR code right there. This gives you access to special giveaways, free bonus resources such as model books, classes, the UTG. You don't want to miss that. This can really help accelerate your learning curve. So simply scan the QR code right there. And again, it's 100% free. Also, please, if you enjoyed today's conference, go ahead and subscribe to the channel. Again, we've got the TraderLion podcast, tutorials, free webinars, key clips that you don't want to miss. And we're really shooting for 100,000 subscribers, so you can help us get there, one subscriber at a time by clicking subscribe down below. It's 100% free. Also, just one quick reminder that we're doing a special webinar with Jason Shapiro, Market Wizard, discussing contrarian trading, where he'll be sharing a lot of his insights about using COT data and how it can help build your edge. Even if you don't trade like he does, it'll be extremely valuable to learn his thought process and add COT data to your skill set, which can help inform you when trading normal stocks and equity. So you don't want to miss that. Spots are limited to only 500. They're going pretty quickly, and you can register via the link that's popping up in the chat right now, and it's also down below in the description. And with that, thank you guys again for attending. Hopefully you had an amazing time today, and we'll see you right back here tomorrow to close out the conference, which is pretty sad, but let's close out strong. There's going to be a great group of speakers tomorrow, and I look forward to seeing you guys there. So thanks so much again today. Leave a like down below if you enjoyed, and I'll see you guys at 9 a.m. Eastern tomorrow. Take care. Bye.